dip to buy. This might be it right now. Might have a nice little dip buy coming up, at least momentarily. It's not really the unclench that we need at this moment. We can unclench more today. But the tone is set for 1 p.m. for the 10-year note auction. Am I in the right place here? Check 1 2, mic check. I'm having some issues this morning, by the way. I think our swam is all fucked up. And if you look around the internet this morning, good morning out there. How y'all doing? Just first off, Tesla's bleeding right now. AMD bleeding right now. Apple on the up right now. So if you look around the market, it's looking like, you know, if I'm a bank and I tell you publicly and I air my dirty laundry on CNBC as I beg my position, you know they're mad at DFV for publicly saying this is my position. They go on instead what they do is they beg on CNBC, these banks, and they tell you, AMD, I'm feeling kind of bearish on it. So they're down this morning. Tesla's got the second largest short in the market on it. It's down this morning. Apple up this morning. So it does look like there's a little bit of positional, crybaby, want my fucking pacifier shit going on. Some manipulation this morning on individual tickers. I noticed it this morning at like 4 a.m. I woke up and I was like, boy, it's kind of weird. Like, I think Netflix was up. There's a bunch of stuff that was up and a bunch of stuff that was down early morning. And it just looked like manipulation. Hold on 1 second here. I got people screaming in the background. Summer around these parts. So we've got kids everywhere, neighbors' kids, our kids. I'm hearing screaming. Kids tend to scream and not mean anything by that. Whereas adults, if you scream, it's like, oh, something's happening. Something really bad's going on right now. Guess that's not the case. Yeah, they need the Zipple. Exactly, they need the Zipple this morning. It's so pompous and bullshit. You know who makes good commentary on this is Jedi Marcus talks about, liquid markets that are real and not fake. Prices aren't fake. And then I'm looking around the market this morning. I'm like, this is all bullshit. He talks about goosing people, not goosing, but groping individual tickers, and the idea that we have true market liquidity, and we know where the bottom is in a stock, and it's the truth is it's all bullshit. This is IWM, by the way. They're staircasing down. IWM is turning down but turning up. Turning down but turning up right now. I've been meaning to discuss IWM in our market briefs, and I haven't really had a chance to. By the time I get to it, I'm like, I ain't getting no space for it. I've been blabbering already, so I'm like, I'm not going to bring it up. So maybe I'll bring it up right now. So IWM, it looks like they're blooding it into the Fed decision. There's two trades in IWM. There's a trade of There's two different kinds of trade when it comes to these decisions, okay? So the first one is this. You've got the run-up trade. So if we're like 3 months out from a rate decision, even if we know we're not getting one, you will see a run-up trade sometimes. A bank gets long on IWM. And so, you know, you got like 3 or 4 guys on a DM on a Bloomberg terminal, and then somebody else gets in on the trade. Another guy gets in the trade, and before you know it, they're begging on CNBC. You know, it's that simple. It's not that difficult. It's not that hard to do. And so they push their narrative. Do they think that we're actually going to get a rate cut? Fuck no, they're just long and a low on IWM. It's that simple. We rotated into it. It really is that simple. And so they run it up. And then we get to the rate decision. The rate decision, we find out there is no rate cut. And so it bloods down to the depths of hell. IWM has been in a downturn for a period of time here, and they're really taking it to a full effect here. See right back over here? They want it all. You know, they want all the cocaine, all the fucking hookers. They want all the wives. They want it all. And a lot of you guys don't understand that concept of wanting it all. Greed. The power of greed. I think that a lot of you think you know what greed is. I don't think a lot of you ever seen how evil and monstrous it can be. And you know, it just like washes all over you. It really is like that Tony Montana movie. It's disgusting. So, but point here, the key point here though is it would be fascinating to watch IWM bleed and blood down into this rate decision, and this might be the ticker for this rate decision where you can get the most bang for your buck heading into this rate decision. It's not like SPY trading sideways sideways and up, sideways and up, sideways and up. JPM noting yesterday that we could have 2.5% moves. Low percentage on that, but they're like, hey, 1.5% down in the morning, 1.5% up in the afternoon, up all night. If you remember that from the USA Networks back in the day. But IWM in particular, 2.5% down, 2.5% up, would not shock me. And it seems like it's it seems like the largest offender. This is IWM, by the way. The most glaring, like, rubber band for the market to squeeze higher. How's all your calls doing, by the way, out there? All you early call buyers, how are your calls doing okay right now? I'm getting whipsawed back and forth. All-time highs yesterday, baby. Woo! Just kidding. I'm just fucking with you. Just a bunch of whipsawing back and forth. Boom, 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 boom. Now they're gonna hem us all in for the 10-year yield at 1 p.m. That could trigger some nastiness or another squeeze. Ricochet all the way back up again. Wham. Pin us in, hem us all in for tomorrow. So IWM, keep an eye on it into tomorrow. I'm looking at, like, SPOOS is like up, right? Consolidates up. Meanwhile, our no offense to any redheads out there, but our redheaded stepchild over here is IWM, the old Russell Crowe, the most vile, hated index in the market over here, full of zombie companies. A testament to the to all these companies that should have went bankrupt back in COVID. That one right here, price action wise, if you can get a little bit more stretch in it, might have a nice little dip buy in here. Even more than Q's or SPY, you might get some outperformance. Get that rubber band going. Now, when you get that rubber band going into the actual decision, you could have a one more fast, swift move down. Just keep your eyes on this IWM trade as we get into tomorrow. Apple ripping face off. Why is Apple ripping face off this morning? I mean, it is straight mooning right now, right? It is now testing 200, which is the first target for the upside move on Apple. It should ricochet here off 200, but it should go higher as well. Why is Apple mooning this morning? Anybody out there get an answer as to why Apple is mooning this morning? I went down the rabbit hole last night on Apple, and I found it very fascinating. Apple is yesterday we discussed some of this stuff yesterday. And the Apple Kool-Aid drinkers are like, no. Apple would never do that to you. But of course they're going to do it to you. You got Elon Musk this morning fucking imploding, either last night or this morning, imploding on allowing ChatGPT on your phone. I'll be honest with you guys. There is, without a doubt, there's no fucking way they're not using your information. I don't care what you say. And a lot of the Kool-Aid drinkers are like, oh, they told you so. Behind every fucking company out there is a lie and likely a bunch of felonies committed. And Apple is no exception to that rule. And if anything, you have the smartest people in the world that are gonna number one tell you your security is fine, and number two tell you that there's no workaround for them and their verbiage to get around it deep inside of their terms of service. So am I a believer in Apple not sharing your information? No, they will. And you're going to allow that through slippery language. That's assured. I know that ChatGPT allows them to not do it phone side. They got to send that ship to the servers. They got ChatGPT though running on your phone. It would be something. It wouldn't shock me to one day find out that they're sharing your stuff, but not anything personally identifiable, and that you clicked something that said yes, even though you agreed that they wouldn't share anything. It's not really a part of what AI is. Now, what's the impacts of Apple and AI? They're going to get a trade. People are sucking each other off on this. I was reading articles last night that said Apple's going to lead the way. Apple's going to be the company to do it. All of this reminds me of the browser wars in the early or late 90s, mid to late 90s, early 2000s. So it's part of it. And you're likely going to see money pour into Apple due to that conference yesterday. There was a note that I made yesterday that this event yesterday for Apple, to me, is the first real event that I've seen where they're back in the driver's seat in some way, with something tangible that a market or a market maker can run with. They didn't understand services. They didn't understand the amount of money that could be made off services. They're scratching their head on that when it first came out. But this is something that is reminiscent of old Apple. So to see them rip this morning, not unexpected. Next thing we have here is GME. When to buy GME? GME trading $24 right now. It's had a low this morning of $22.74. I gave you a price target, I think, of $21.50 yesterday. It really doesn't matter. What really matters is that price stays above the weekly trigger. That's $16.84. You could get some doom and gloom down here. What's most important, though, is that weekly trigger is the most important thing. That price stays above it. I think the buy is at like 20 bucks, 20 and a half, 21 and a half, somewhere in there. Maybe a flat $20 on GME. But regardless, I want you to understand something on GME here. When you get these crosses, right? When you get this momentum from underneath the bottom of the market, when it comes up like this, whether you like the ticker or not, I don't care if you like it or not. But it's very that the month, as long as price is above the monthly, the stock is positive. It's a baseline. But the most emotional trigger is the weekly trigger. It's very emotional. People get really excited around it as we blast down into it. People get really upset about it, angry. It elicits emotions from traders. If price breaks below the weekly trigger, it elicits huge emotions from traders. So just think of that weekly trigger as the emotional trigger. If you think of it like that, it's an easy way to grasp the idea of it. The hourly and daily triggers, if we're above or below, are the triggers for trend, intraday, intra-week. Where are we headed, right? Where are we headed this month overall? Where are we headed this week overall? Not so emotional. We don't spend, there's not a ton of emotion there. But the weekly trigger is all about emotion. It's like weeks in, weeks out. Price gets very interactive with it. Doesn't get that interactive with monthly or quarterly triggers, any of those triggers. But the weekly, it's like, because as it comes into it, either coming down or up into it price, it gets fucking wild with the weekly trigger. And not until it starts to break away, price begins to break away from that weekly trigger, does the market calm down a little bit. It's an emotional trigger. And that weekly trigger is coming in to cross the monthly trigger shortly. The next 10, I think it's next 10, 15 sessions. So you're going to expect a lot of wild ass action around that trigger. And currently that GME trigger is at 1683. So I'm telling you, 20 bucks, right around 20 bucks. If we made a fast trip to 1650, I bet that would elicit like a not Pavlovian, but like a Hulk smash mad response from investors and traders. So keep some ammo in the background if you're going to buy that $20 range, roughly that $20 range. Keep some ammo for that $16.5, $17, just to round you out really nice. You know, smooth it out for you, and those emotions that could elicit if we go down that far, that deep. But still, anywhere in there, I'm very bullish here on GME, and that momentum, when it swings up and breaks through that, when that weekly breaks through that monthly trigger, these fucking guys are so fucked. These hedge funds are super fucked. And as a matter of fact, the trip higher should start before the weekly crosses the monthly, at least behaviorally from other tickers. And I went and looked last night just to make sure. I checked all over a bunch of similar situations, and I'm assuming they're going to try to get out. That's my thought process here, is that they're going to try to get unfucked as quickly as possible and sit on their hands, and then they're going to claim that they didn't lose their asses as we squeeze higher. But I'm very bullish on GME, still on record as saying, well, I wasn't on record as bullish before or weeks ago. I was more that, hey, a big event's coming, and it ended up being bullish. I think James Rowland was bullish at that time, or he knew it was coming as well. And but he was more bullish than I was, I think. I was undecided. I thought it was possible bankruptcy, or I thought it was possible some unknown good news, like they decided to buy some shit or whatever with all that money they're making. I haven't looked this up. Can anybody tell me out there if I thought they had 75 million shares. Then it's like 200 million shares. Are they just doing like shit tons of shares here issuance? What are they doing? I keep seeing different numbers floated around everywhere, and I thought it was 75 million. Then I saw 200 million. It's Kappa Kitty Bro. Some of you guys might not know me. So I'll introduce myself to some of you out there. I went by a moniker. I'm an old school Wall Street bettor from not one, but maybe like, I don't know, day 30, something like that. I'm an old school Redditor too. I'm an actual OG Redditor from when I was talking to myself, and they were way back in the day. They would they faked that people were on Reddit when they weren't. I came from Fark and another message board. I forget the name of it anymore, but there was one before. I think it was one before Fark, and it was Fark, and then I went to Reddit, and I was on Wall Street Bets from a long, long time ago. My name on Reddit was called Building Detroit. Matter of fact, I came to Twitter because of the fallout from GME. I was in that GME trade before there were apes, so I knew all about GME. Came to Twitter, talked about it on Twitter, made some very good close friends on Twitter before anyone on Twitter was talking about it. There was just a few of us from Wall Street Bets, and then most people stayed on Wall Street Bets at that time. Then the apes came through, and all the old school Wall Street Bets basically ended. It's not the same thing. Wall Street Bet, it's working itself back right now to what it once was, but it's in no way, shape, or form the same Wall Street Bets. People used to say that about Wall Street Bets over the years, but it really did change rapidly during the rise of GME. So was I ever an ape? No. But I was an OG trader of Wall Street Bets. We knew that it was not going to stop until they shut it down. So yeah, am I an ape? No. But I do feel for the apes right now. I understand that's their only outlet right now to get back at the man. If that's how they can get back at the man, I'm okay with it. One ticker out there, they can fuck around with these guys, do it all day long. Power to them. Power to the apes. Power to anybody that's pissed off the man. And if they want to run something up on them, fuck yeah, do it. Take them to the cleaners. I love bankrupting hedge funds. And no, theoretically, shorting is fine and good for the market. Is that what these guys do? Fuck no. They're scum. They're the scummiest of scum out there. That's what they are. They're scum, greedy, fucking. They will run a company to zero if they can, even a good company. So the answer is fuck them, no. Get one over on them. You lose so much as it is, and you want to burn one to the ground or two of them, have at it. Call them. It's okay to call some of these hedge funds. They call you all day long. They don't even blink. They don't even care about you. You're like a shit stain on the bottom of their shoe. So yeah, fuck them too. It's okay to smote down a hedge fund every once in a while. See, I'm kind of with those guys. Small dip buy down here. We know there's buyers down below here at 531, 532. They're likely going to hem us in here as we head into 11:31 p.m. Price target upside 534.28. And a pinning action into 1 p.m. for the 10-year yield this morning and this afternoon. A lot of ping-ponging, right? I'm telling you. I mean, you take it. So you do it. You take it. You're a shit stain on the bottom of their. They wouldn't even pay you a moment. You don't know this because you don't know pros. If you ever know true professional traders, and they're honest with you, I'm telling you, you're a shit stain. They don't give a fuck how good of a trader you are. It is fucking war out there. Like between you and I as a retailer, we treat each other nice. Our community treats each other nice. I'm telling you, these guys don't operate like that. This is not how it operates in that world. It is one of the most. If you think like if any of you ever worked in a used car lot or a car lot somewhere, or any of you know salespeople and how ruthless they can be, they ain't got shit on the stock market. They ain't got nothing. The movie Wall Street, greed is good, all that stuff. That's like the tip of the iceberg. Just the tip. It's not even the actuality of it. You're at war every day. You're there to win, kill, destroy all of it. It's a fucking It's a wild ass world. Gross and dirty. If any of you guys ever seen salesmen like that, it's very similar in terms of like ruthlessness. It's like ruthless. People are ruthless. You don't think that it's like that, but it is. It's very much, it very much is. Then you mix in smart people in the mix, right? Sociopaths, psychopaths, high functioning, testosterone fueled. Reminds me of the military, by the way. The Army was a lot like that. Okay, so GME. So just back on topic really quick with GME. I am very bullish here. GME is already turning around. Look at it. We got a big giant fucking green dildo right now. Look at it. Just ripping fucking face. It's like, fuck you, we're going up. And I'm telling you, these fucking funds are going to get fucking bent over. Bent over. We're going to $100. I promise you. We're going to $100. Telling you, they're going to get bent over and they don't even know it. So, and that's fine. That hand of God, though, that comes up, that momentum, right, is nothing to be fucking trifled with. I'm going to warn you about, I've warned you yesterday about that. I warned you on FinTwit. That momentum, that market momentum is years in the making. And some of it is powerful. We were already underneath the monthly, so we already went to the depths of hell on this tick. We went down to fucking zero, so they've been building this shit up for years. You might not even realize that. You probably don't realize that. This momentum. So when GME was down around $1.50, $3, right? Like this momentum has been building for years and years and years and years and years and years. Some people are like, well, it has to go back to $3 or it has to go back to $4. No. There's a way. It's like a butterfly. It's like what do they say? Like Jurassic Park made that famous, right? Butterfly flies its wing, flaps its wing. It's like a stupid trope, but over in Asia or some shit like that, and creates a thunderstorm or some shit in North America, right? That's basically what this is. It's a wave of momentum that's been growing for years and years and years and years and years and years. And you get some dipshit at a hedge fund going, no, it's going to fucking zero. No, it's not. It's going to run this fucking thing straight to the fucking moon. It has nothing to do with shorts. It has nothing to do with anything but momentum and how that momentum just grows over time and over time and over time and over time. And where price is right now is like the perfect sweet spot for it to fucking moon. And I can't wait for it to happen. I can't wait to see $100. GME now trading 26 right now. Off a low of $23. So we'll see. We'll see what happens there. I can't wait to see $100 with you guys out there. Big giant ass green bar in GME this morning. Big giant ass green bar in GME. Okay. What else? So we covered GME. We covered the rotation that's going on. You see it, right? There's some rotation going on in the stock market right now. You can see it in Teslas and AMDs. You can see it in Apples. NVDA. Didn't see it. This morning. Here's NVDA. I'll chart this one out for you at some point this morning. I'm sure NVDA bulls are panicking right now that there's going to be some rotation into the Apple AI trade. There's possible that could be true for a little bit, but I would not turn my back on NVDA at all. I would not turn my back on it. I think they're still going up another 25 to 30% eventually. Maybe not today, but I do think that they're going up at least another 25, 35% from their split price, roughly around 1,200 or whatever it was. It was like 12. It was bouncing around $1,200. So and Apple's still ripping right now, bouncing back off the 200, a little bit of rejection on 200. That was the natural resistance before their conference or an event. What else do we got going on this morning? Dixie on the move to the upside. IWM getting blooded slightly this morning. SPX, let's talk about that one next. Market still supportive this morning. Gamma still strong out there this morning, so dips being bought on SPOOs. See if we can get some data stuff going on here. You're not going to bring down the market, tear it down to the ground without some real bad news, some real bad vol. Volatility ramping right now as well, the vol surface. Vol curve heading higher and higher and higher, so we are expecting some volatility. See if we can get this SPX data going for the morning. Get the clean data. Oh, yeah, baby. Every morning, new freshies coming out for data. Ah, shit. I forgot that I... Hold on one second here. I wrote a post. I got to tell you guys a story. So, I got a funny story for you guys. Hold on here. What's going on here? So I was on Reddit the other day. And, Reddit is a weird fucking place now. We're just talking about Wall Street bets, right? What Reddit is not near what it once was. Even if in its glory days, it just was not. It's not the same place. There's some shit about Twitter that I don't like X and Twitter. And then I have a moment on Reddit where I go, God damn you, we need Twitter. Okay, so let's take a look. We're going to talk about that too here this morning. So, okay, we got SPX Gamma over here, right? Let's look at the upside here. We've got no call Gamma, a little bit up here, 54.24. This is showing me that people aren't buying. Hold on here. What's going on here? I got text coming in. Hold on a second here. Okay, hold on. So, Bookmap Gamma. Let's go over to this Gamma really quick here. We're not getting a lot of development to the upside. This shows a wait-and-see attitude by market participants. If they're long, they're already long, right? There's no expansion in call Gamma to the upside. So anyone that was long or bought calls, you probably hear people out there right now telling you market's going to fucking moon. That's because they're already fucking long, okay? But we're not seeing any call expansion and call Gamma coming in. We had for a minute 5,500 and 5,600. Now it's disappearing. So we're not seeing huge call Gamma at this point. Looks like everybody's wait and see at this point, okay? Next thing for this morning, it's not really major resistance, but it is resistance here, okay? All right, fuck it, we'll rewrite the whole thing. There is some resistance here now at 5,300. Okay, doesn't mean we can't come up back above this resistance wall up here, but just note that resistance this morning is up above at 5,350. Also note that local support is below the Gamma flip. Okay, so we could see a little bit of volatility. Below this Gamma flip, but if we don't lose it, it's still supportive. So even if we bloodbath down here or anything like that, it should still be bought and sent to the upside. If you're a dip buyer like me, at least 5,300 as kind of your spot, okay? If you're like looking for Captain Jim James used call lot, and you can see also the daily trigger coming up here. We probably make this a little bit lower. Negative gamma is more like down here. I mean, this is negative gamma here, but I'm talking about like the depths of hell negative gamma. This is different. This is volatile gamma, volatile negative gamma. This is like pure evil down here. This is like I got bit by a vampire in here, and then I actually went back and drank some blood, and now I'm full vampire. Kind of gamma. So as of right now, take a or watch or be aware of this resistance that's being formed above here. Call wall. The real call wall is likely up here at 5,400. About 5,400 is 164 million here. It's very light up here at 5,375, but there is some resistance here. So just be aware of it into tomorrow. Okay, so call wall 5,400. You want to be trading the edges, of course, trying to buy this down here, sell that up there, not dicking around in the middle. This is where options go to die right now. We're not getting any relief to the downside. It looks like we need an event to trigger that, or an event chase to go up, chasing that to the downside, or buying a dip, or selling a rip above to the downside. Inside here is like the death zone, and no joy for bulls or bears, no joy for bulls in here either. It's where options are going to die. As soon as they murder all these options, I'm sure that we will start to see some unclenching. As a matter of fact, we're seeing it this morning. This blood right here is a little bit of unclenching down below. So we'll see how that works itself out. As we come into the event, you should see all of the value in the options chain get destroyed, and they don't care because they don't have to pay all this premium out to call and put buyers as we get closer to the event. Okay, so there you go for the gamma. There's your gamma picture. Let's get back up here. Let's go to a 1 minute basis here. And let's watch what's going on up here in half-hour trigger, 1 hour trigger crossland. Let's see if these bears can sell us back down, or at least grind us sideways into 1 p.m. Yeah, if you bought the dip, congratulations. Take the money off as we approach the hourly trigger. We can jump back in if we squeeze above with a back test and a new high. We can take that up higher and higher and higher. What else I got for you this morning? What else do I have for you this morning? Toggling this. Hold on a second here. Oh, well, hold on here. Hang tight. I got some stuff to read to you here. Okay, I've got some. I just want to go over some news for you this morning. Goldman sees core inflation slightly below consensus on a month-to-month basis. We know we get CPI in tomorrow. We expect a 0.25% increase in May core CPI versus the 0.3% consensus, corresponding to a year-over-year rate of 3.5% versus the 3.5 consensus. We expect a 0.11% increase in May headline CPI versus 0.1% consensus, which corresponds to a year-over-year rate of 3.36% versus 3.4% consensus. Our forecast is consistent with a 0.2% increase in CPI core services, excluding rent and owner's equivalent rent, with a 0.19% increase in core PCE in May. Going forward, we expect monthly core CPI inflation to remain in the 0.2 to 0.3% range for the next few months before settling around 0.2% by end of 2024. Now, we have discussed this in the past. I have told you that we do not ever want to see velocity in inflation or unemployment. I've told you that over and over and over. Gag myself in the mouth with a long fat stick. I've told you guys this a million times. So going forward, Goldman's saying that until at least the end of the year, right? Inflation should just kind of calm down and cool and flatten out. This is conducive to markets that go pretty big to the upside when that happens. So GS basically telling you they're expecting some nice upside into the end of the year. Coincidentally, corresponds as well with our election season, right? GDP is looking pretty good. Debt to GDP ratio, not so good. Now, we still have that problem with employment, wages out there. I think you're going to get a Fed chair. I think you're going to get that good CPI print. And I think you're going to get that Fed speak that's going to talk a little bit more dovishly, stating that you're going to get a cut coming up down the road. I don't know if they say end of year. I don't know if they tell you you might get 125 basis point rate cut. The jobs numbers are kind of hot right now, but it's not a bad thing. They can let them run hot. But we are on the back end. We're doing some damage. We're slowing the economy down a little bit, and I don't know the interplay on that. I mean, I kind of get it, but they're getting close. Is my point. They're getting really close. Where if they don't cut, they could send us into some stagflation, which we don't want, and they could send us into a recession as well. So I'm fascinated to see what comes out tomorrow. But CPI, I'm pretty bullish on whatever that CPI report is. That it's going to come in slightly cool, not cool, but slightly cool. I think Goldman GS's summation of this is on point right now. We see further disinflation in the pipeline for 2024 from rebalancing in the auto, housing, rental, and labor markets, though we expect offsets from continued catch-up inflation in healthcare, car insurance, and housing. We forecast year-over-year core CPI inflation of 3.5% and core PCE inflation of 2.8% in December 2024. On to some other news. OPEC left world oil demand growth forecast for 2024 unchanged at 2.25 million BPDs, and also left the corresponding forecast for 2025 unchanged at 1.85 million BPDs, barrels per dollar. According to the cartel, Saudi Arabia's crude output fell by 32,000 BPD in May to 9 million BPD, but OPEC's overall output rose by 29,000 barrels to 26.63 million BPD, driven by Nigeria, plus 74,000 BPD to 1.4 million BPD. WTI chart is currently trading 0.9% lower, currently at $77.5. I don't know what the update is at this moment with that. Bloomberg, PIMCO expects more regional bank failures in the U.S. Because of a very high concentration of commercial real estate loans on their books. The real wave of distress is just starting for lenders, or the real wave of distress, in quotes, is just starting for lenders to everything from malls to offices. John Murray of PIMCO's head of global private commercial real estate team said in an interview. When does that stuff come home to roost? Probably not yet. But I would give a warning that whenever it does start, it's gonna start. It's gonna start rolling really heavy and hard and fast. I don't think it starts until 2026, but there will be attempts to front run this now. You will get warnings. from guys here like John Murray. They just want to be on. They want to be on the books as making this statement to you. I don't expect it to be material until at least January of 2025. And can it become even? And from like January 2025, it can become material. And then it becomes very dangerous as we head into mid 2026. Whenever that does happen. And I do expect that to be a problem for us down the road, but I think it's tied to some other shit too. I think it's tied to rate cuts. I think it's tied to the housing market coming to an end. There's also some apartment shit going on. That's a big fuck show right now. It's coming out now that where my friends are buying properties with cash, there's a whole bunch of lazy fucks out there that weren't doing that. They were pulling the same old 07, 08 shit. I don't know when that shit comes home to roost, but it's gonna. It will come home to roost. But it's a game of chicken right now, and my friends, at least, are playing it. I'm not seeing my friends anywhere panicking yet. I got a group of investors that I'm part of, and I don't see any panic. The only thing that I see is that they're aware of it. I have some friends right now in this group that are accumulating cash, or at least stating that they are, but they're not panicking themselves yet. So I don't know. When my issue here is when we come into this late stage housing cycle, they can ramp the fuck out of this for like a year. So I'm not really at that panic stage yet myself either. But anyways, that's PIMCO coming out this morning, giving you a warning. It's expected. You'll hear more of this as we get into end of year. Currently we're in June. So, start ramping it up now. If you're a big time crash bear, if you're like a doom bear, like a Haas or something, if you're one of those guys on Fintuit, you should be. This is your time to shine. You lay out the plan, the book, and you start the doom shit so that you can say, "I told you 6 months ago," and you'll be right in January, March, January, somewhere in there. You'll start getting right. So start laying it out now, so that you're eventually right. Wells Fargo at a conference says older office buildings in large cities are seeing some stress related to commercial real estate. Russia says its troops have started a second stage of drills to practice the deployment of nuclear weapons alongside Belarusian troops. I wouldn't take too much into that with Russia and the nuclear weapon bullshit. Russia's a fucking... Get into that conversation in a little bit. Don't worry too much about Russia out there. If you're from Europe, don't worry about them either. I want you to know that. U.S. will always be there for you. Always. More than you even believe. The U.S. will always be there for you. And you keep practicing. Keep drilling, Russia. Please. I don't even think your missiles fly, I'll be honest. Just the maintenance alone that it takes for... I mean, I'm serious. The maintenance alone that it takes for these nukes to actually work. I don't even know if they got anything that can fly, let alone detonate. I guess they could do something tactical, but the response would be it would be stupid. I don't think people grasp the idea of how, if we want to, how quickly we can reach out and fuck somebody up. So anyways, Russia's making threats because they're pissy that U.S. missiles are taking out some of their planes, striking targets within Russia. It's okay for them, but it's not okay for anyone else, right? Anyways, I'll leave it there. The European Union is set to delay key parts of global bank capital rules by a year, so that the bloc's lenders will not be disadvantaged by continued wrangling over the standards in the U.S., according to people familiar with the matter. And any of you out there right now that are going to say anything like, one nuke is bad, let me tell you something. World War fucking II, we let it get bad. We let it get real bad before we intervened. We don't want to do that anymore. You know, you got to defend freedom. I got to tell you, even if you're a Democrat, even if you're the biggest Democrat in the world, that's important. The world looks up to us to protect most of the world to be free. Most of the world. The world that you likely want to live in, even if it's better somewhere else. Even if it's better in like Norway and Amsterdam, we are the protectors of that shit, period. We're the ones that can do it. And so you should be that same way. You know, don't ever look, those guys make threats like that. You fucking stare them right back and tell them, I double fucking dog dare you. You know what I'm saying? Like, you got to be like that. You got to be that. All right. Anyways. The European Union is set to delay key parts of global bank capital rules by a year so that the bloc's lenders will not be disadvantaged by continued wrangling over the standards in the U.S., according to people familiar with the matter. Let me ask you guys a serious question about, if you're from Europe, let me ask you a serious question. I posted that, did I post a link to it? Maybe I didn't. You know, before these elections this past weekend, there was an uproar. I posted about it in Market Brief. There was some elections that went on in India and in Mexico, and there was a lot of fucking butt stinkiness by investors, and they were stinky about reform. This is reform where corporate profits would go lower, and Mexico had some currency issues wrapped up into that as well. It was fascinating because I was reading a Bloomberg article before the weekend, and they point blank said it. They were like, if Europe votes in reformers to cut back on corporate profit in Europe, the U.S. could have hell to pay come Monday morning. And from my perspective, that didn't happen. The reformers for less corporate profiteering did not win. So it smells like there was almost like it was planned for these elections to go the way they did. If I'm wrong on this, let me know, because I'm not from Europe. I may be dead wrong on this, but it seemed like even the volatility that came in over the weekend into those markets and somewhat into the pre-market in the U.S., volatility ramped here in the U.S. over those votes over the weekend. And I'm just wondering, from your perspective, is this like that moment where corporations like, woo, we got to keep our pockets lined and all that kind of stuff? If any of you know what I'm talking about, if some of you might not know what I'm talking about, some of you might know what I'm talking about. If not, I'll try to pull up that article for you to read this at some point this morning. What else do we got here? Let me read this really quick. At the money, volatility is moving higher, foreshadowing things to come. CPI, FOMC statement, but gamma environment remains supportive with implied daily gamma at 564. However, looking at the strike spectrum below, we notice that support at 5350 has weakened, and things could get uglier very fast if we drop below that level, which also represents the gamma flip threshold. That's that resistance point right here that I was showing you. See this yellow box right here that says there's some resistance? Let's take a look at that one more time. So right down below here, just so you can see this yellow box right here, this yellow box is like slightly resistance now. So pay close attention to this. And we're at it right now. Do you see us? We're right on it. We're parked right on it right here. So just be conscious of this. Bulls want to get above this hourly trigger right now. So this main screen right here, right where we are, bulls want to get above. Okay? And they're looking for, let me get this trigger screen really quick. Oh, it's so sloppy, dude. It's so sloppy. Sloppy Joes. So right in here, these bulls want to get back above if they can, and they want to catch a new high. Even if it comes back down over here, they want that to just like get bulled up again, okay? So pay close attention to this. This is not a place for you to take a trade. That was a place to take a trade right there. If we can get above, we break above, come back down, you want to take a trade right there. That's a good trade right there. I like that trade. But if they hem us in, you know, where you get like a failure in here, and they start trading us sideways into that 1 p.m. hour, and then they're fucking right here ready to short your ass straight back down to the depths of hell. 10-year yield comes up at 1 p.m. It's like a consolidation trade in here. You know, that's what it looks like it's going to be. It could be wrong in this, but that's what it looks like it's going to be. If the yield or the 10-year note trade is fine, then yeah, we can start heading higher up here. Buy a dip. And maybe we can run this up into the close today for tomorrow. Squeeze out the shorts, but just be conscious of it. Where we are in the news that we have coming at 1 p.m. What else? We talked about that. We talked about Goldman this morning. I think I got all of that stuff. And I got a problem this morning with Thinkorswim. Thinkorswim imploded yesterday. I was like trying to get him back up. This morning I logged into Thinkorswim and they told me to go fuck myself again. Called Thinkorswim up a couple times. They're not even answering the fucking phones. There's like, they probably got 100 brokers over there, and they're like, well, fuck you. We're just not answering the phones. What else I got for you guys this morning? What else do I got here? Let's turn on some news squawker. I'm having problems signing up right now for Trade the News. I don't know what's going on with it. I don't know why I'm having problems signing up for Trade the News. They said it's their. I don't know if it's my business credit card, and they're going across the pond with it. I don't know what's going on. I've made like 3 attempts to sign up for it, and I'm having issues. Their customer service is trying to help at this point. They said that what they said was that like my payments went through their server, and now it's like alive inside of their processing, but it hasn't escaped. It needs to escape or be murdered, and it hasn't been murdered, the way they're describing it to me. So I apologize for that, for not having that for you right now. I might have to I think I might have a solution, but I'm not positive. What else I got for you here? I don't see anything else. B of A sees customers spending more with debit than credit cards. Good job. Congratulations. More spending with debit than credit cards. Always makes me happy to see. The Red Book this morning, of course, year over year was actual 5.5, forecast 5.8. What else I got here? Everyone's on the no change trade. Nobody sees a cut coming. Nobody. What else I got there? You can't see a serious down move unless some serious macro events happen. CPI could do it. Hot CPI report can fucking do it. Hot CPI will fucking send us to the depths of fucking hell. I guarantee it. I gave you guys the. Did I give you guys the? I think I talked to you guys. I gave you the link last night to the Bloomberg article, right? You could read through that. Did you guys read that Bloomberg article from the trading desk at JPM? They gave a pretty thorough expectation on what to expect. Uncle JBJ, did you get to read that article or no last night? Did you read that article though last night? They did. I think they have a pretty good expectation. Send the link. I'll send it right now. I'll send it right now to all of you guys to read. Give me a quick second here, boys and girls. So basically, JPM is saying what I've been saying. They're in agreement with me. They're in full agreement with me. So, which I kind of liked. I was like, I'm with those guys. Which is basically, I'm going to give you. Here's an archive version. I'll give you guys an archive version. Normally, they pretty much call it. GS this morning is calling it, but normally you'll get these guys calling things, and JPM's like, I don't fucking know. JPM's like, I wouldn't even blink. Well, the key points in this are that key points that I took away was this. Hold on here. The key points that I took away from JPM was, number one, so here's an archive link if you don't have a Bloomberg subscription. Note to you as well, if you sign up for the Bloomberg deal, they offer you 2 months at $1.99. And then your subscription goes to $30. But if you cancel, they then offer you $1.99 for the entire year, which actually is pretty reasonable to pay for a news source. So, anyways, read that article. The key takeaways here are that both events are independent. CPI, it's its own thing. Or they're considering CPI as its own thing. And they're considering the rate decision as its own thing. And they specifically said to look at it like you could get a hot CPI report. The market could bloodbath 1.5%, 2.5%. Very low percentage chance on that, on the 2.5, but it's possible. But that even if the market were to plunge 2.5%, that Jerome could turn it right around. And we could come right the fuck back up 2.5%, 2 o'clock in the afternoon. Now, I don't think that that's probable. Personally, I don't think that that's probable. Yeah, there we go. There's the top one right there. Personally, I don't believe that that's probable, but be aware of it. And that JPM also stating that they weren't going to like call it. They were pretty much like, it's something where you sit on your hands and trade the reaction. So if we're to blood down 1.5, you buy the dip. If we scream up 1.5, you sell the rip on CPI rather than trying to call it. Yeah, for Bloomberg, like I would say for $2 a month, hard to say no. Having to archive their articles can sometimes be a pain in the ass. You get Bloomberg TV. The Bloomberg TV gets a little Republican-y. If that's your thing, then good. It gets a little too political for me. It doesn't tie it into the market. But I realize you have to stay up. I realize you have to stay up to date. But there is some bias there, for sure. Now, but their news coverage is outstanding. Their market coverage is impeccable. It's the best market coverage out there, period. I don't think there's anyone better than Bloomberg in like overall out there that dispenses news for our markets or in relation to our markets. And it most certainly is not CNB bullshit, CNBC, CNBS bullshit. Joey Donut, good morning. How are you? What up, Doe? Good to see y'all out there. Good morning, Shelton John. How are you? I love that name, Shelton John. It's a great fucking name. Okay, so we are now breaking above resistance on SPX Gamma. That puts us back into some safety. I guess I should put that resistance up here, shouldn't I, then? And just say it's party time. And there's your Gamma flip down below. Whoop. You want to flip this back. We'll turn this right now into support as we're above it. And we'll flip it to green. Right there. Breaking above right now as long as we can hold our heads above. The call wall now back in play up here at 5,400. Market coming back into some calmness for the moment at least. We are now trading above the hourly trigger at 534.30. We're looking for a new high and a successful back test of the hourly trigger. See if we can watch that right there. Get that a little bit closer so you can see it. What else I got for you here? Boom, that one right there. Push that up for you. So you can get the volume going on that. I think the name is great, man. I love the play on it. I love it. Shelton John. I like it. It's cool. And I love Elton John, too. An all-time great. Working out of 12 of 13 candles right now. All right. That's all I've got for you at this. I'm going to take a quick break here. It's now 10:59. I'm going to take a quick break, take a piss. I got to get some more coffee in me. I had a rough sleep last night. I couldn't sleep last night. I don't know why. I wasn't worrying about anything. I didn't have anything going on. I had a bout of insomnia. It's very rare for me to get insomnia. But I had insomnia all night long last night. Q's squeezing high right now, trading 466.0. Coming in to retest the high from Friday at 9:30 in the morning. HYG ready to explode to the upside. NVDA looking like it wants to squeeze to the upside right now. Apple off the charts now, trading 203.11. Tesla getting shanked right now, trading 169.38. VIX getting murdered again. VIX 9-day getting murdered to the downside right now. S-Dow not really doing shit. GME looking kind of bullish right now. Make sure that it holds 24.34. I would really like to see a break above GME. I'd really like to see GME trade 32 and then buy the dip. I'd really like to buy that dip down there on GME. We'll pay attention to this one, GME. CL right now. I am bearish on CL, just looking for a place to short. I think you might get as high as $80 before that short takes place. But if you begin to see it bleed below, I'd be wary of it right now. It's below 77, 76, 79. Start getting bearish. It could begin to roll here and not trade as high as $80. Price target on CL, 67, maybe even lower. Low 60s, 50s, something like that. Keep your eyes on CL. AMD getting shanked to the downside right now, still getting shanked. Uber trading higher. This was an alternate count. Someone was trying to get a short going on Uber, and I disagreed with that over the $20 an hour shit. For Uber, Uber lost a court case for higher pay for workers in California, I think. Congratulations. If you're an Uber worker, Uber's not going anywhere. They're not going to leave California. Dixie on the move to the upside still right now. IWM, a little bit of a dip by here. And yeah, we'll leave it on SPX, still sitting over. We'll make that a little bit larger for you there so you can see it. And I'll be back with you guys in about 15 minutes. About 15 minutes right now. I'm going to chart out some Apple for you guys right now so you can have some expectations for it. You're looking for like a failure at about 210. You might break over it here. I think you break over it. I think you get above 210, like 211.50, something like that. Pull back down here to the daily trigger. Fail 220. Bloodbath into end of quarter. Not end of quarter, maybe like the first week. An unclench of some kind. And then get the trade above 220 that holds and sticks. It's kind of wonky the way I drew it right now. I'm going to keep looking at it right now and just see. There's a tick here, a little bit of a loss down here. Something like this. You can't hear me out there? Can you hear me? Can't hear me. Oh, you guys can't hear anything. Sorry about that. I had shoot.
I can help your employees deal with
I apologize. I had Bloomberg radio going for you, and I had the squawker going, but only I could hear it.
He's in the zone right now.
Paul, if you guys ever hear like nothing, just scream at me. Be like, what the fuck is he doing out there? Leaving us hanging out. Oh, this isn't good right here. Failure. I don't like seeing that. What's up, bulls? What's going on? That's some weak ass shit right there. That ain't sauce. What the fuck is that? That ain't good.
Markets move fast, and now you can too, with instant funding and fast trade execution at IG.
Yes! Rebel coffee, baby! Rebel coffee!
I sort of believe it's a tool.
Is that Winky?
It has got intelligence, if you want to give it that as, moniker. It's not
REBN!
Producing intelligence is one of the greatest opportunities I've ever seen. Few experts in C++ and C. But the world has many people who knows how to converse and ask somebody for help instead of...
All right, I got to take a quick break. I got to go potty really quick. If you guys don't know REBN, we just discussed that ticker. Matter of fact, we'll do some tickers today.
Bills total $983.7 million.
Along with all these incredible innovations, it's causing new...
Let's see if we can scare up any tickers this morning.
This is a tsunami of change, and only the smart ones are going to recognize I have to plant the flag now.
Nobody covers technology like
$99 a year.
Context
for our real-time
changes
service.
everything.
See if we can get some tickers rolling. Anything looks juicy today. What do you got for me today, Winky? You throw some out there, Winky, and I'll throw some out there. We'll both throw them out there. See what we got out here this morning. We got anything good? Goddamn Reddit. Ugh. REBN is fucking destroying right now. Jeez. What about next? NXT. Let's look at NXT this morning. What are we gonna look at here? I gotta chart out a bunch of shit for you guys. NXT. We've traded NXT in the past, right? I've owned NXT. NXT. Next tracker. Oof. I had it. Oh, look at it. Let's go down here and look at this one. NXT. Not bad, right? Pretty close. Not perfect, but pretty close. But NXT, dude. NXT crushing it. We've been tracking this fucking thing forever. It's just cranking right along, cranking again. Now there's something here that interests me. You see this little cup and handle right here, right? And then wham to the upside. Whoop, cup, handle. There's your cup. There's your handle and a fucking whipsaw to the upside. I don't know why we're on orange here. What the fuck made us do orange? NXT. All right, for right now. It's getting a little toppy here, right? But you got your cup again, don't you? And maybe we come back down and ram it home here. So maybe make a little thingamabob down here. NXT 50. The one thing I would say about this would be set high tick back here. So this is how I'll do this. I'll do with this one. NXT. I would first like to see NXT make a new high. I'd want to see the new high, but not trade it. Just see it. And then look for a back test over here. And let's see where we'll take this one. Let's go to a weekly. Well, that is a 1 week. 65.90. How about we change that out to a monthly expectation? So much nicer for monthly expectations. Right up in here. $87. Woof. We'll do R3. R3 is the price target. I love that you can change these to weekly and daily. So fucking dope. Make this 4. Right in price target. PT 1. So right up there. PT1 78.20. Only if we get a new high, a back test successful on the daily trigger. And we get something like that going on. Not yellow, not green, yellow. Right there. Something like that. But we want the new high first. If so, we'll get 78.20. Ticker is NXT. We've traded that. We've traded this ticker here. God, it just keeps going up. Fucking just keeps going up. I fucking love this ticker. Just keeps fucking just like all these tickers. If you watch these tickers over time, they become the next meme. They become meme eventually. They just keep fucking cranking, and then eventually, like 3 years from now, they'll be all over Wall Street bets. They'll be trading like $150 fucking, and everyone's like, "Dude, just buy it. It's gonna be fucking awesome." All right, there we go. 11:21. We've got a 1 p.m. Got a 1 p.m. 10-year yield or 10-year note, excuse me. Auction. They're likely going to hem us in until we get there. Then they'll come in with they'll put the screws to us. They'll throw us down and they'll be like, okay, we want to get paid even if you get an A+, I want to go down a little bit, bro. NXT, look for a new high. Do not take that NXT trade. Do not take that NXT trade unless you get the new high. It's the only thing that'll show strength. If not, I would expect it'll trade all the way down to $38 or near there, $40, something like that. So it's a big disparity. You're talking about bouncing off 50, going all the way down to 40, roughly $40. NXT, baby. Back on the hot sheets again. All right, I'll put this back on for you.
As well. All that said, we're really just going to have to be paying attention to the polls, as right now it is June. We still have almost 5 full months to go.
Hunter Biden convicted of gun charges by jury.
Between now and then, including a second criminal.
Did you see that Biden said he would not pardon his son?
Implication on companies surrounding gun law and indeed the way that might direct travel for purchases, for demand, for supply?
That's an interesting question, Caroline. Obviously, Joe Biden is largely a president who has spoken about gun safety. He will, in fact, be doing so at an Everytown for Gun Safety event later on today, which, of course, is affiliated with Michael Bloomberg, the founder and majority owner of Bloomberg LP. But largely, he is a president that has advocated for greater gun control measures, which is difficult for perhaps explanation-wise when your own son illegally purchased a firearm, as he was found guilty of doing today with this crack cocaine addiction. Will it, though, materially change anything around gun laws, Caroline? It's very unlikely, given that no matter what developments we have seen in the gun violence area, mass shooting after mass shooting in the United States, nothing really is ever done legislatively. Joe Biden has signed a number of executive orders looking to restrain gun purchases in some areas, but it's something that you really can't crack down on without congressional approval. And with Republicans in control of the House, that is unlikely to be happening, at least in this Congress.
Look, the courts are being put through the test at the moment, Kayleigh. Are we likely to anticipate more of this as a political narrative, as a political way of doing business here in the United States?
Yeah, it's an interesting question, Caroline, because we are at this really unique moment in time where we now have not just a former president and presumptive nominee who has been convicted of crimes, but a president's son convicted of crimes within the same week, with 2-week period. Both of these obviously incredibly historic. We have never seen anything like this before. It will be interesting to see how this alters the narrative, because after Donald Trump's conviction of 34 counts in New York just less than 2 weeks ago, there has been a narrative about a justice system that has been weaponized or targeting Donald Trump. Whether or not that is true, as Joe Biden did not actually have the power to, say, direct a New York state case against Donald Trump, he could theoretically have the power to step in with this special counsel investigation into Hunter Biden, with this trial, potentially with a pardon, and he has declined to do so. He has declined to intervene, as he has really been trying to speak.
At 11:30 a.m. Eastern Time, the U.S. sells $46 billion in 52-week bills, prior high yield 4.895%, and a prior bid cover of 3.
See if it does indeed alter the narrative around the way the justice system is working, because you can no longer say it's only going after Donald Trump. It has come for Biden as well.
Kayleigh Lines, just so much information to digest, and reacting in the moment to this finding from the court and from the jury. We thank you very much indeed. All things Washington now. We return to all things technology. Coming up, we're going to be deciding, well, the direction of travel for Apple going forward. Laura Martin of Needham joining us with her reaction on Apple's long-awaited AI strategy. What she makes of the iPhone makers' partnership with OpenAI. That's next. Plus, we already know where Elon Musk stands on Apple's newly announced partnership, but he's getting some empathy from the UAE State Minister for AI and Digital Economy, who spoke to Bloomberg earlier today. Just take a listen.
What Elon said was, if it turns out that they're going to deploy ChatGPT and OpenAI's infrastructure on the OS level, then there are some security risks. And I think given the quality of work that they're doing and the secrecy around the advancements that they're pushing forward, it makes a lot of sense for them to think that way.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
Markets move fast, and now you can too, with instant funding and fast trade execution at IG.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
Is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Shortly expecting the results of the 52-week bill auction, I'll lead with the high yield.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York, and moments ago we had the breaking news that a Delaware jury has reached a verdict finding Hunter Biden guilty of gun charges. Now, he was found guilty by a federal court jury and has become the first child of a sitting U.S. president to be convicted of such crimes. Now, we know that the verdict came less than 2 weeks after his father's chief rival for the presidency, Donald Trump, was found guilty by a New York jury of 34 counts of falsifying business records late last month. Political system intertwines with the legal system, and to do that with us is Bloomberg's Greg Farrell. And I mean, extraordinary really what we're currently seeing in terms of how the legal system is becoming a focus for both presidential candidates, but this one is novel in terms of the son of a sitting president.
Yes, absolutely, Caroline. It's extraordinary. It's extraordinary because I think Hunter Biden believed he was told he had a deal a year ago to put this behind him, and that fell apart. And it's a question of timing. With Donald Trump being charged in several places, it's just so patently would be unfair. It looked, the optics would be terrible if Hunter Biden weren't charged and, taken to trial.
What did you make of the swiftness or not? Many had felt that perhaps they're coming back a second day. It hadn't been an immediate decision coming from the jury.
Well, of course, we don't know what goes on in the room, but I think that if they get it in the afternoon, let's think about it. This is a serious thing. Let's not just jump to any conclusions. Everybody sleeps on it. This is a normal thing. And they all come back the next day. It's a pretty simple case. And unfortunately for Hunter Biden, he wrote it in a book, what his condition was at the time, and he didn't take the stand. So it's really not a surprise in terms of the verdict. It's more, as you pointed out, the magnitude of this, that the strangeness of the world we're in, where one former president's been convicted 1 week and then the son of the current president right now.
I asked this previously of Kayleigh, and I put it to you as someone who so understands and embodies what the legal system means for U.S. politics, but the U.S. economy as well. Is this the way of the land now? Are we going to see far more legal system taking action around?
4.915%, 4.915%, bid cover ratio 2.87, 2.87. As the US sells $47 billion in 52-week bills and awards 25.35% of bids at high.
Has brought charges against the former president. It's, this is going to get worse before it gets better. I don't think there's going to be cooler heads that are going to prevail. Whoever loses the election in November might, get even more galvanized, or whoever wins to, exact some retribution. So it's a concerning time that way.
Greg, we really appreciate you analysing what is another unprecedented finding here. Hunter Biden found guilty of gun charges by a federal court jury in Delaware. Greg Farrell, we appreciate him. Meanwhile, let's go back to what we do here at Bloomberg, the markets. Currently seeing, of course, political risk evident over in Europe and France in particular under pressure. We closed the market down with the Stock 600 off by almost a percentage point. France in particular, as Macron calls a key vote. And rumours did swirl as to what would be the longevity of his own presidency. He, of course, has refuted that for now and says that he would remain. NASDAQ 100, the big tech benchmark, currently up 0.1%. Apple guiding us higher. Bitcoin on the downside, up by more than 4% as bonds sell off. A key correlation happening, and indeed much trepidation as we look towards the Federal Reserve decision this week, and indeed an inflation print. Move on, some individual stocks for you. Look, we did get some earnings coming out of Autodesk, and not good enough when it comes to this software provider. We're off by 5%. Tesla down by more than 3%. Interesting what we're seeing currently with Tesla, and JP Morgan having a note out today, really saying that having spoken to investor relations over at the company, they worry that the revenue generation of a robo-taxi ain't coming anytime soon. We're off by more than 3%. But of course, Elon Musk, the leader of Tesla, currently distracted by the frustrations he sees with Apple's relationship with now OpenAI and an integration of ChatGPT within Apple's operating system. Apple currently up more than 6%, a new record high. 205 is where we trade. And that's all because of the WWDC conference, which, of course, opened yesterday with a whole slate of software updates across products, partnership, as I mentioned, with OpenAI, and, of course, it's long-awaited Apple Intelligence. Here's CEO Tim Cook.
Recent developments in generative intelligence and large language models offer powerful capabilities that provide the opportunity to take the experience of using Apple products to new heights. Introducing Apple Intelligence, the new personal intelligence system that makes your most personal products even more useful and delightful.
Apparently that video all being shot on Apple devices as well. Jackie Davlos, who was there on the ground yesterday and now live from San Francisco for us. And it felt in the moment that perhaps there wasn't that wow factor, but today the market's showing there is.
That's right, Caroline. It took the market a little while to catch up, but notice how Tim Cook emphasized the word useful. That theme, utility, they mentioned AI for the rest of us, and I think this really showed through in the features that they highlighted yesterday as part of the Apple Intelligence rollout. Let's look at the summarization capabilities that we now have, transcription of audio. You can also personalize AI emojis. When you think about just kind of the mass appeal that can have. That was really key. They also emphasized privacy, but outside of the AI features as well, that iOS 18 upgrade has some pretty cool things coming down the pipeline. For example, you can tap back messages with different emojis. You can schedule messages to be sent later. You can access more apps in different ways in your control center, organize them differently on the home screen. They really gave a lot to people here in this rollout. But look, we were sitting there for an hour and a half before the AI highlights really came through. So there was a lot of anticipation. And look, this is their first swing. And from what we could tell, it's just the first step in this broader AI rollout.
And many felt that actually only sort of name-checking OpenAI for 2 minutes within that 90-minute thereabouts presentation, it was trying to suppress the actual real integration, but really lean into what it will do for you as a consumer, a user, and really trying to identify privacy and protection being key. But Elon Musk calling that into question.
Exactly. Siri was a major highlight because that digital assistant will have the opportunity to basically be able to pull information from ChatGPT when answering questions. Now, you're absolutely right. Privacy was highlighted, Caroline. They made sure to note that you can opt out of this, that you have to give Siri permission to tap into ChatGPT. And when you think about the concerns that Elon Musk is raising, well, it does also shine a spotlight on the other questions that Apple has to answer. What exactly happens to the data? Does Does OpenAI have access to kind of seeing how you interact with the app on the screen? There's a lot that I think people want to know, and some of those details will come out, but they were keen to actually highlight that users will be asked for permission. Their requests and informations will not be logged. So, of course, really keeping with that Apple privacy ethos.
Jackie Davlos with the roundup. We thank you so much. It was a long day yesterday and up early with us today. We thank you. Let's keep this conversation going. Laura Martin, Senior Entertainment and Internet Analyst over at Needham & Co. You join us for more after, well, you're a buy on Apple. You overall think that the price point is going to go even higher than this to a $220 price point. But what happened at the event yesterday and what galvanizes it today?
Right. So, I mean, I think we were very disappointed at the Apple generative AI stuff. First, they put it last, as you said. They talked for 65 minutes about new colors and new things that felt like Snapchat type of functionality. And then in minute 65, they started talking about the only thing Wall Street cares about, because this company has very anemic growth. They're going to report 1% revenue growth this year. And what we really wanted to hear was what's going on with generative AI that's going to force an iPhone replacement cycle to drive that 1% revenue growth higher to 2, 3, 4%. And there was nothing I felt that they'd announced that made consumers want to run out and replace their iPhone. And now we have to wait a year, because they have an annual replacement cycle. So now if you didn't like what you heard yesterday, you have to wait a year till the next cool generative AI stuff. So, I mean, I thought it was a very disappointing day, which is why the shares were down 2% as soon as they finished speaking. Today, they're up 6%, maybe because the developers are finding cool ways that they can integrate these functionality into their own individual apps.
Yeah.
But I thought it was too little too late. They continue to be way behind on generative AI, and they need to catch up.
And they seem to be trying to catch up with, for now, third-party relationships. What is the flow of money here, Laura? Because they're not going to be charging us for the joy of being suddenly able to use ChatGPT, should we wish to do. How much are they going to be paying an OpenAI? How much money are they going to be having to spend? Or is it good that they don't need, well, their own GPU haul to a certain extent?
Yeah, they say they're going to be using their own servers within to sort of hold on to the iOS data in their own servers in the cloud over at Microsoft. So I do think they are still continuing to focus on privacy. But I think the way the money works is that the way these deals typically work is that Apple will pay the Microsoft Cloud and ChatGPT probably a fixed fee per month. And then they'll put it into your iPhone price. So your iPhone price is going to go from $1,400 to $1,500, and you'll pay for it up front. If they find that there are heavy users, my guess is they add a monthly tier. You know, I pay $20 a month right now for ChatGPT 4. My guess is Apple gets that for a lower price, but they probably surcharge heavy users of that particular functionality. I think a lot of people, because of the privacy issue, will not use it, will not call out to the cloud to ChatGPT. And then Apple it's not costing Apple anymore for those users.
So maybe this key concern referenced by Elon Musk will be listened to by some in the crowd. Laura, the reason we love having you on the show is the breadth of analysis you do across so many of the tech peers and entertainment. I'm interested as to, who is winning the charge of any of the actual device makers or operating system providers? I mean, is Alphabet doing any better with the Google offering?
The only thing that's strategic position for Google Alphabet is better because they have cloud, so they get it cheaper because they own it. They have Android, which is the direct competitor to iOS. They have an ad-driven business in search, which means they have a lot of first-party data. They have YouTube, and the world's moving to video, as we know. YouTube is the #1 streamer and makes a lot of money. Now it's the largest subscription streaming service as well as the largest ad-driven service, which gives them first-party data. So it feels like their strategic position is a lot better, even if they're sort of inferior at every one of those things they do. The fact they do them all gives them really strong, better data on you and also more ways to make money from you. And they don't feel like they're strategically in a box. Apple feels to me like it's strategically in a box. It can't participate in generative AI except for through its $1.5 billion users. And that isn't really true of Google. It feels like it's going to participate across the globe in its 3 billion users a day that come in for search.
Such great context. Laura Martin, thank you for joining us, Senior Entertainment and Internet Analyst over at Needham & Co. Didn't even get on to Paramount with her next time. Meanwhile, coming up, Masha Bucha's Day One Ventures announces its biggest fund yet, with backing from 9 female limited partners. We sit down with her. Meanwhile, let's just look at what's happening on the stock market elsewhere. Spotify up a percentage point. Now, we're understanding here at Bloomberg that the company will introduce a new higher price premium plan for some of its users later this year. The plan is going to cost at least $5 more per month, but it's going to include access to high fidelity audio, to new playlisting tools. If you're an addict, you're going to want it, apparently. From New York, this is Bloomberg Technology.
Markets move fast, and now you can too, with instant funding and fast trade execution at IG.
The world needs ways to reduce carbon emissions,
especially for heavy industry.
We're working on solutions in our own operations,
like carbon capture
and clean energy from hydrogen.
So who are we?
The US weighs more limits on China's access to chips needed for AI, so people familiar with the matter confirm the US discussions on China AI chip curbs.
With low emissions. Let's deliver.
This is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
I'm Alex Rodriguez.
So the Biden administration is considering further restrictions on China's access to chip technology used for artificial intelligence, targeting new hardwares that's only now making its way into the market, people familiar with the matter said.
I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife and I. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal.
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Early-stage VC firm Day One Ventures has announced it's raised $150 million for its latest fund, Fund 3. Joining us now, Masha Bucha, founder, general partner at Day One Ventures. And it is the biggest haul of money thus far and some interesting LPs. Talk to us about how you brought them together.
Hi, I think nice to be here, and I think lots of that, what we have accomplished is because of the great work of the founders that we had the luck investing in and working together with.
So interestingly, some of those founders are now your investors. How many of your original portfolio companies from initial funds have put money in you now?
Well, we were lucky to be backed by a few dozens of founders, including 10 unicorn founders and including 14 founders that we previously backed, which is beautiful to see because it just proves that we on the one hand, partnered with very successful and promising entrepreneurs who became successful financially, so they can afford to be backing the fund. And on the other hand, it also proves that we were able to build these partnerships that's were like a very strong bond, and they were happy with the experience they got as founders.
Yeah, let's talk about the partnership, because you've got an interesting route into venture funding. And initially, you built a public relations company. You helped these founders tell their stories. And did that allow you, therefore, to get access to early opportunities to invest, and you built from there?
Yeah, I think I started 2 companies before, and previous company was PR Studios that I created, and where out of 30 customers that I took, out of few hundreds, 10 became unicorns in 2017, and it just brought me to understanding that lots of companies I'm betting on as a PR, as a publicist, becoming successful. So I pivoted into angel investor, which also went very well, and I had a lot of exits and few unicorns, and that enabled me to get experience to be able to create new fund in 2018. So that's how it happened. But speaking about communication, I think if you look at any business problems that you want to solve and any business goal or task you want to solve, I think 90% of business problems are actually communications problems. And I think this is something that we train founders to solve, and this is something we help them to do.
Portfolio includes WorldCoin, of course, the crypto startup that was in some ways co-founded by Sam Altman. You've also got Do Not Pay, you've got You.com. It's interesting that these are all male founders, but you've focused on female LPs to a certain extent. How many female founders do you have within your portfolio?
We are lucky to back over 40 female founders that's in our portfolio. I was also very proud that with Fund 3 we were able to bring 9 female limited partners, because Fund 2 had no limited partners, and for Fund 3 I really had as a big goal and North Star to be able to find a few female LPs, and quite proud that we were able to find 9 very successful, mostly female entrepreneurs that decided to back this fund.
Well, bring them on, Masha Bucher. It's a really interesting story. Biggest fund to date, 150 million. We thank you so much, Day One Ventures. Thanks for stopping by the studio. Meanwhile, we've got some more breaking news for you, and this time regarding public companies. The US, we understand, is weighing yet more limits on China's access to chips needed for artificial intelligence. The restrictions would target novel gate-all-around technology, we understand. They're in early talks on high-bandwidth memory curbs as well. That's integral to what we've been seeing with NVDA and, of course, SK Hynix and some of the relationships with Samsung. People familiar confirming the US discussions on China AI chip curbs, and we're down by almost 2% on NVIDIA. We're currently seeing TSMC as well, trading down 1.9%, and AMD off by 1.5%. This is Bloomberg Technology.
New factory construction in the U.S. nearly doubled in 2023 with the Next Level network from AT&T Business. Manufacturing leaders are using reliable and secure connectivity to create the assembly line of tomorrow so we can all drive toward a sustainable future.
Want Ethereum exposure right in your brokerage account? Get it with symbol ETHE.
Also keep in mind, in 10 minutes time around the top of the hour, we're expecting the release of the latest EIA short-term energy outlook report.
Crypto investing begins here.
Markets move fast, and now you can too, with instant funding and fast trade execution at IG.
Just a heads up to you out there, be very careful. You see this double top right here? Be really careful about this.
In some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage, because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice, saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Morning from our world headquarters headquarters in New York, I'm Menace Crenny.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
We just want to return to that breaking news regarding the Biden administration potentially considering further restrictions, yet further, on China's access to chip technology used for artificial intelligence. They're targeting new hardware that's now only been making its way very slowly into the market. GAA, gate-all-around. It's basically the most cutting-edge chip architecture that really, at the moment, we're seeing semiconductor companies just starting to adopt to make them more powerful. But this could be affecting the likes of NVDA in particular. We're seeing pressure on some of these stocks more broadly. Let's talk about the ecosystem of technology with Laure Negia, who's an analyst, portfolio manager over at Comgest. That's a boutique asset management group that has more than $32 billion in assets under management. Been some great bets on some key companies within the Mag 7 and more broadly. Are you anticipating yet more geopolitics to interfere with some of the investing landscape here?
Yes, we do. I mean, we think it will affect sentiment. Now, there will be disentangling of sentiment and then hard reality in the P&Ls. But yes, we think geopolitics and the impact on this sector is here to stay.
What's interesting is thus far, NVIDIA, even though it's sold into China significantly, has not been buffeted around too much in terms of its market capitalization because of this, because they've had a bigger demand coming from the US and Western economies. Is that going to counterbalance? Is that going to be enough to sustain these heady valuations?
Tough one, but certainly, you know, the demand is very, very strong and projected to outstrip supply for a good long while yet.
TSMC, for example, I believe is one of the key bets and beneficiaries you've called out in artificial intelligence. Why those particular names? Where are we seeing the money flow when it comes to picks and shovels, then into the application of AI?
Yeah, I mean, when you think of NVIDIA and then everything that supplies into it, there's TSMC. NVIDIA is a TSMC customer. Then there's the suppliers to TSMC. So there's very direct plays in the sector, and then there's more and more indirect plays. And it's quite fun to be thinking not just about those direct plays, but some of the indirect plays as well.
Yeah, has NVIDIA got too crowded? Have you felt that people aren't looking more broadly at this overall ecosystem?
Well, it's hard to say NVIDIA is not known. So starting from that place, we like to think who's supplying to them, who's a client of theirs, how can we play this a bit differently, perhaps?
Where else can you play it differently? Because I know that we're thinking of Apple trying to play catch-up when it comes to application and real use case of artificial intelligence by you and I in a consumer way. But how is it being adopted elsewhere, and which companies are going to benefit?
So there's a supplier to TSMC that makes the EUV, the extreme ultraviolet lithography equipment called ASML, which has become quite well known, but just a few years ago was not. There are companies like Hoya and Shinetsu Chemical in Japan. Hoya makes the mask blanks that are used to design, etch the semiconductor circuits onto the wafers. And Shinetsu Chemical is a leader in the wafer space. So those tend to be a little bit less well known. And yet they're very present in the supply chain and great beneficiaries.
Got to get global. Have you got to trade and actively trade this market, or do you just sit and wait for valuations to rise?
We think this has been a great buy and hold space because, you know, right now sentiment is very, very buoyant. But look back 2-3 years ago, everyone was extremely depressed. The geopolitics were weighing very heavily. So it's actually a wonderful space to be a long-term buy and hold investor with the ability, when you're brave, to buy more when the sentiment's down.
You're buying more right now? You just said sentiment was up, so I suppose not. It's great to have you here. Come back. I know you're passing through New York. She's Laura Negia, talking all things tech, Comgest analyst and portfolio manager. Meanwhile, that does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. This is Bloomberg Technology.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
Markets move fast, and now you can too, with instant funding and fast trade execution at IG.
What?
The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock price, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that, you know, may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
Live from Bloomberg's world headquarters in New York, I'm Shonali Bassick.
And I'm Tim Stenevec. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
And Tim, global markets, they're on edge thanks to uncertainty around the Fed's rate decision, U.S. CPI coming up tomorrow, and European politics. Bitcoin might be set up for a new round of volatility.
Plus, in just a moment, Ian Rogers of Ledger joins us to discuss his products and providing security for crypto investors.
And we're going to discuss deals in the IPO market. Kraken is said to be considering raising a final funding round ahead of a possible public trading debut. And Robinhood makes a move for Bitstamp.
All that and more over the next half hour on Bloomberg Crypto. But first, here's a snapshot of the market, starting with Ether. Over the last week, down 9.3%, even with the excitement following the SEC surprise pivot last month toward approval of those spot Ether ETFs. that crypto has not breached its 2021 record. Moving to Bitcoin, which did hit a record back in March, down over the last week of about 5.9%. We can go ahead and round that up to 6%. It did move lower on Friday, and it's moving lower again today. As Shonali mentioned, crypto investors could see some volatility depending on what we hear from the Fed and what we get from CPI. The correlation between Bitcoin and the 10-year yield is unusually negative right now. And the Bitcoin mining company Bitfarms trying to stop a hostile takeover by Riot Platforms with a so-called poison pill. Reminder, Riot Platforms made an unsolicited $950 million offer that was last month to buy Bitfarms. Shares of both companies down right now. Shonali.
Speaking of Bitcoin volatility, Tim, I want to take a look here at the net flows for all 11 Bitcoin ETFs since their January launch. A net $15.6 billion has poured into those ETFs. And on Monday, we saw $65 million of outflows, snapping 19 straight days of inflows. Remember, ETFs are an on-ramp for people who are using other services, particularly hardware services for crypto. And we're going to talk a lot more about that in this show, Tim.
Well, speaking of that, let's turn to the company Ledger. Because more than 20% of the world's crypto assets are secured by Ledger, the company offers connected devices and platforms in more than 200 countries. Ledger started shipping pre-orders for its latest hardware. It's called the Stacks wallet. It was designed by iPod builder Tony Fadell. It's the world's first palm-sized e-ink touchscreen to safely read, understand, and sign transactions. It pairs with your smartphone so you can check your balance and do more with the app. It also allows self-custody of your crypto. That's why it exists. In other words, instead of keeping your crypto on an exchange, you're carrying it around with you in your Stacks wallet. We're joined right now by Ledger Chief Experience Officer Ian Rogers, who joins us from France right now. Ian, good to see you again. I got to tell you, just talking about this product in the newsroom, I still think there's this gap in understanding about why someone would need self-custody of their crypto, especially if they're buying crypto as an investment rather than using it to buy and sell things. So what's the use case here for those people?
Well, I think, the question I always ask is, if not self-custody, why crypto? What really is the innovation? I think for the very base level, if you think about the revolution of the internet, that was this revolution where information became free. It moved around more freely. So what's the revolution of blockchains? The revolution really is digital ownership. So security and custody is important. Wherever you have your digital value, you want to know that it is safe and it's available to you when you want it. And having self-custody or ownership, self-ownership is not only an option, but in many ways it's a right. And it's a right, not only to own your own value, the way that you can take your own possessions and put them in your personal safe, but also to be able to use them, right? You have possession of your passport and your driver's license, and that allows you to use them for things that were not necessarily anticipated by the DMV. And that's the same for all digital ownership.
Hey, Ian, one thing that I've been thinking about over the last few days, especially with Apple's event yesterday, where they talked a lot about AI happening on your device rather than in the cloud. And over the last few weeks and months, where with the rise of AI, we've heard sort of this return to quote unquote, on-premise from the cloud when it comes to AI. And I'm wondering if there's any sort of parallel with what you're thinking about at Ledger with what we're seeing in AI right now in the return to on-device and on-premise.
Well, definitely in terms of, I think that AI and blockchain are two sides of the same coin. AI brings digital abundance, and blockchains are fundamentally about digital scarcity. And we're already living in a world where you're looking at web pages that were made by AI that was fed by web pages that were made by AI. So at some point, knowing that it is actually me who is saying what I'm saying, and that it's not a deep fake and it's not altered, is incredibly important. And it's important not only if you want to hear what I have to say, but also if you're using things I've written as input. I mean, simply logging into your X account with your Ledger as opposed to only your computer is a strong signal that you are a human. And then you could, on top of that, have a form of digital identity which says, okay, I'm actually a unique human, or I'm the same human that owns those other two accounts. So I think that increasingly we'll see the ways that that these two things go hand in hand. And certainly Sam Altman has understood this for a long time. It's why he started WorldCoin. So I think that these things are really two sides of the same coin.
Ian, it's interesting because you talk about them in the way that they work together, but there are a lot of people who talk about blockchain as though it's building
I'm losing the stream really quick.
That direction. You know, the Rabbit R1 device was a hot device at CES this year, and we talk about, you know, an action model, a large action model, and a lot of it, you know, after Apple's announcement in AI yesterday, you know, you can see that Apple is moving toward an action model. I would argue that those action models are much more convincing and much more fun for us as users when that's coming from a world of digital ownership instead of this world where my logins, you know, basically hide my preferences behind thousands of different websites. You know, as you travel around the web, you know, you're constantly logging in using, you know, something like passkeys or 1Password to log into, you know, to many, you know, sometimes 10 different websites in a single.
Oh, they want it down there, don't they?
To your preferences and your data. So that makes something like Rabbit R1, for that thing to work, you've got to give it your credit card information. You have to give it your logins, and now it's going to go kind of scrape the web in this Web 2.0 way and try to look at it through that. I mean,
blood.
It's a really interesting idea, but it's not. I don't think that's the direction that technology will take us in, you know, 15 years from now. I think instead, you'll have ownership of your value, your identity, your preferences, and as you move around the web, you'll simply say, yes, I'm you know, giving access to this particular data temporarily. You're basically federating whether it's your identification or your preferences to the various, or ultimately.
This is such a fucking scam. I'm listening to this guy fucking talk right now.
Transaction, you know, without
having. If you want to give your information up anywhere around the web, you know, it's be a very easy thing. Just password it or passcode it, or you get a card or something.
There's this concept, not your keys, not your coins, that we used to talk a lot about when it came to the exchanges, and now with the advent of the ETFs, them really taking off in the spot market as they are.
Yeah, it's like Apple's doing over there.
Lost a little on the new people entering the crypto universe. Do you think that there's a risk that people are forgetting that they?
What are you guys doing?
Their crypto, that they don't have complete control over it when they.
Can we do 0 fucks to give?
I think. Look,
bag of dicks. Oh, I probably shouldn't say that. Sorry, apologize.
And I think that also, you know, the user interface on the ETF is great. At the end of the day, you know, it's about, you know,
Bork, what are you doing?
Asset class and getting them on that kind of slope of what is this? You know, how can I learn? How can I learn more about this?
So you guys know the setup here, right? They put us here sideways. They park us.
People find themselves, find their way to Ledger.
Miro's out there. They got a short on the market. They're just waiting for 1 p.m. Where's 1 p.m. over here?
As they become more educated, then they learn more
there.
To Ledger. So I think the ETF.
Let's bring that over there a little bit
for people to get, you know, really secure custody and exposure to the asset class. You know, it's a great thing, and I think, you know, really whether you're doing custody or
doesn't never like whenever you're like stretching this stuff, it doesn't match up over time.
I think if somebody is
like when you go from like a 1 hour to a 30-minute, all these lines get all fucked up
through something like Robinhood. If they're using a,
I mean, not that it isn't cool as fuck, anyways.
Like Coinbase or a Kraken, you know, those are all fair game. And then, you know, when you come to self
half-hour triggers trying to cross the hourly trigger, you got a little bear plane over here in 1 in 5 minutes.
Where you have either insecure custody.
Yeah, these fucking guys, it doesn't matter if you get an A or a C, they're still going to want to drop it off. You also know here on these
Chief Experience Officer Ian Rock.
Also on these auctions, if it's an A plus, typically still don't get all crazy and expect a giant fucking move up normally. It tends to favor sellers if the grade is bad. It's not really a watch it prove me wrong today. Generally speaking, you usually don't get long-lived rips to the upside. You'll like fail right here, even on like an A plus. Even then, you'll get a dip, then the rip to like right here. At best, 90% of the time. If the bid comes in short, this fucker will fucking blast down to the depths of hell. Like a bear's wet dream. Keeps the bears entertained, so it's not really meant for you and I. Just take note of that. If we get a bad bid to cover, likely down here at 528.76, it'll crater. I'm not expecting the auction to be too bad. The only thing I can say right now is that the 10-year yield. The yield looks pretty good right now. I mean, it's getting bullish right now. It's not quite on the back end on the hourly, so I don't know what to say here. My initial thoughts would be hang tight here. I got something in my eyes. Yeah, that's what I think. Go to Nabunga. Well, I guess if we're going to go up tomorrow, that's what I'm looking for. I'm looking for the... see here. Old Manny time, break timey. I'm bullish here. I'm generally bullish, but I'm bullish in general here. But it always comes down to that one moment, right? It's always like that. It's always even if you're bullish, I prefer to not chase bullishness. Now, it doesn't have to be a major pullback, but some kind of pullback I enjoy. We've had two of those so far. We've had one down here, but then we got the grind in here. We got another one right here. I'm like, yeah, It's like barring some unknown from CPI or more specifically FOMC. I still like buying a dip. I don't like chasing. I'm not a fan of it. I'm hedged right now too, so I guess I could take a long here, but personally, I like to buy dips. I don't like chasing. Yeah, the other thing I was thinking about yesterday too was there were some good dip buys yesterday, but they're so short-lived. There's no follow-through. So you're like in, you're out, you're in, you're out, you're in, you're out, you're fucking zigging and you're fucking zagging. Not that it's not a good thing. It's good for intraday trading. But I don't know why I'm at this for myself right now. I'm in this like, one trade and I'm done. Whatever dip I can catch. But as long as there's some follow through too, I guess a call spread would be fine here, even if it dipped. Is anybody expecting tomorrow a hawkish Fed? Anyone out there expecting a hawkish Fed or a rate increase? I don't see that anywhere. I was looking to see if there's any cracks in that would suggest. I think the talking has worked well for the Fed, but I don't think it does in the future. I really don't. There are cracks, and there are some cracks going on in the background. With some, not so much with employment, wages or unemployment, but there are some cracks forming in the economy. I don't know how long that lasts. I don't know how long they can keep doing that. Like, talking the market up or down works kind of well as data's coming in your favor. saying bad auction today, cool CPI, dovish Fed, very nice auction Thursday. Yeah. I don't know. I hope he doesn't personally. I really hope that I don't know how he does it. I get where we're at. He doesn't want to talk rate cuts. Like, I know he doesn't want to give a rate cut. I don't think he wants to give a rate cut tomorrow. The market would burn. I don't know if you know that, but the market would burn. It wouldn't burn too bad, but it would burn. It's not a bad time of year to do it, though. We're in June, right? It'd be a good time to do it. Also, or timing it around the election volatility would be a good time to do it too. But I bet he's afraid that it'll get crazy. That's the thing on the Fed is, can you give one rate cut and then raise again in the future? It's a tough call. Unless it breaks, do you really fix it, right? Would the market believe that? There's only I'll tell you what, if you guys get a rate cut, there's only 15 to 20% of the time do we move higher sustainably. Even if we get the squeeze, it's only because the market wasn't prepared for the rate cut. We actually end up rolling down and fucking selling hard and heavy. There was another discussion that came out this week that talked about if we make that rip to the upside, that like if that blow off top, that like 1990s shit, things could get wild. That shit haunts my dreams. It really does. I'll be honest with you. Like the mid 1990s to 2000. I wasn't trading then. I wasn't doing anything. I didn't have any awareness of the market then. Not until I had awareness of the market in 2000, 2001. I was starting to get active in crypto in 07, 08. I was surrounded by a lot of people in the market, though. A lot of people that were the original, not what Occupy Wall Street turned into, but the original Occupy Wall Street movement, when it was really small, when it was Burning Man type stuff. I was hyper aware of it then, and I was trading crypto. But at that point, I think I was trading crypto at that point. But I don't know. I have no experience trading the 1990s. It couldn't have been easy. There ain't no fucking way. There ain't no way you're coming in and telling somebody, hey, we're going to burn 20% this week, and by next month we'll be up 40 to 60%. Like, no one would fucking believe you if you told them that. Nobody. There's nobody out there that would believe you saying that. If you saw a 20% down, like, week here, the fucking sentiment would go into the shit dumper. It would be fucking crazy. It would wash out most of the retail. That would wash out retail in today's day and age. I think without the dissemination of information in the mid 90s, it was there, but it wasn't like it is today. It might have been more manageable. We had internet back then. We had message boards. Yahoo was huge during that time period, but I don't know if a retail anybody could deal with that shit. Like just knowing that you're burning 20% and then you're just fucking straight fucking melt up. Buy every 20% dip. 3 or 4 or 5 times. There's been some discussion whispering about that stuff going on again. Even JPM was saying that. We just have a quick quick 5.5% move down. Just really fast and hard. And I'm like, do you know how many fucking people are fucking unhedged for that? There's so many. It would be ridiculous. I guess COVID was kind of like that, right? COVID was kind of like that. That's probably the closest. Probably the closest analog that we have. I mean, that shit was just buck fucking wild. That shit was pure insanity. $12.21. They're setting it up right now. All the doom and gloom. Hedge funds leaning in right now. I knew we were rolling. It was clear as day that we were rolling in COVID. We were due anyways for a recession. Not only that, the market was poised for a crash. Velocity had already peaked and started rolling on higher time frames. Had COVID not even been mentioned, we still would have rolled down. We still would have had the crash. In my viewpoint, we would have. It's the same as the whole structure of it on velocity was the same as every other crash we've ever had. It's the only thing that makes me think that not that COVID was manufactured, but it amplified or coincided with that. It's kind of sketchy when you look at it. You're like, fuck, they kind of knew it was coming anyways. It was a perfect catalyst, and velocity was right there with it. Like, it knew something was coming. I remember talking to my wife, and I'm like, fucking stock market's going to crash. I'm like, fucking stock market's going to crash. I'm like, I was in the Army. I went to chemical and did a chemical thing. The home of chemical, Fort Lost in the Woods. Did some winter training there, did some chemical training there. And right when that shit was happening, I was like, they're going to shut this fucker down. I'm like, I can already see it a million miles away. Like, at the time, I had just moved into a house in Detroit. And I was scared. I couldn't figure out in my mind how long Detroiters would last. I was like, how much money do Detroiters have saved before they fucking burn the place down? Well, I didn't think they'd burn Detroit down. I figured they'd head out to the fucking suburbs and get some fucking payback. But I was concerned. I was concerned right when they did the shutdowns. I was like, how long do people have before they're going to be fucked? That's what I was like, they got to pay people. I thought of that too. I'm like, they're going to have to fucking pay people. I'm like, there ain't no fucking way. I also thought they'd bring National Guard out in Detroit. They had a lot of police presence and stuff, but Detroit never got out of control or anything. Detroit, they hemmed that shit in. I got to give a lot of respect to, a ton of respect to Detroit African-American culture. Like, all my white friends, it's horrible to say, but like all my white friends out in the metro, they were having like backyard parties and fucking swinger parties, and fucking all the kids were hanging out. And they were all lying and shit. Detroit did it right. They literally, they locked themselves up. They masked up. Matter of fact, Detroit was one of the last places. I've been all over the country since then. One of the last places where people wearing masks. So I got to give it to Detroiters. But they were like, they didn't trust that shit. Detroit was like, fuck that. I don't want to die. They eventually started partying. But not in the beginning, and at the end, they were one of the last places I've been where they were still masking up. That's what I figured they were doing out in the suburbs. What's the other thing I noticed from COVID? I did a ton of skiing, and we'd go skiing, and all the rich people were partying. It was like COVID never happened for wealthy people. Anywhere I went where there was true wealth, like concentrations of wealth, they didn't give a fuck. They were just doing what the fuck they wanted to do. That was glaring too. How very wealthy people didn't care. They just kept doing their thing. It was fucking awesome. I'm not gonna lie, I had a fucking blast skiing during COVID. It was epic. Like socially distancing, it's like it was a no-brainer. It's cold outside, so it's not like you're breathing and all this shit's alive. It was like the perfect thing. Skiing during COVID was fucking epic. I'm not gonna lie, it was fucking epic. But I wasn't the only one thinking that. And we drove too. We didn't fly. We did the COVID thing, so we're like, all right, we'll drive wherever we're going. So we did all that. I got friends that worked through COVID too. COVID was a different experience for a lot of people, wasn't it? There was a way, like COVID was like people have wildly different experiences. Like I had guys working for me. So like I had like so I was like moved to Michigan and I'm buying houses and I'm trying to flip them, then I'm trying to hold them, and I had a bunch of guys teach me about construction and how to put a roof on, how to pipe a house, how to run gas lines, everything. You name it. These guys taught me everything. And in between these houses, I would have downtime, and so I would put these guys to work for flippers and stuff like that, right? House flippers, house buying holders, and these guys would work, and I would put ads out for these guys to get work, right? So I'd put ads out there and bid on a job or a flip or whatever, put these guys to work. And what really sucks about Detroit is there's a lot of racism. Not just racism. There's racism, and there was not as much right now, but there was a just fuck Detroit mentality. Wasn't necessarily color. Some of it was color of skin, but there was a part of it that was just like fuck Detroit. Point blank, blanket statement, didn't fucking matter. But I moved here as the city was turning around, so a lot of these guys couldn't get work. This is shitty to say, just because they were African American and from Detroit. Literally, I'm from Detroit and I'm African American. So I would bid on these jobs being a white guy and put these guys, get these guys work, these guys jobs and stuff, and so they could keep working and feed their families, feed themselves, feed their families while they were starving. So I did all that shit, right? And that was through as we led up into COVID. And for us, as we paid these guys, a lot of these guys, Detroit at that time was still very much a cash-centric city. It's not like that as much today. It's still there, but not quite as big as it was when I first moved here. People exchange cash for all kinds of stuff here. Cash is king in Detroit. Wherever you go, no matter what you were doing, cash. And a lot of these guys needed paid cash for one reason or another. They wanted paid cash. But we tracked all that shit and filed it all along the way for these guys. And I remember when they shut Detroit down, these guys all came back looking for, we're fucked. And I was like, well, luckily for you, we filed all your shit for you. You just didn't file it. So if you go back and file it now, you're going to be in the clear. Some of these guys got work through COVID, but most of them did not. There was still construction, rehabbing going on quietly. But it was nowhere near what it was before COVID. There's a lot of homeowners doing it, but not necessarily construction. No shit, huh? Yeah, it was quiet as fuck here too. It was quiet here too. It was a ghost town. It was a fucking like the first parts of COVID, first year of COVID, and Detroit kept itself together. Detroit did great. I was scared because it was Detroit was coming back, and I was like, oh fuck, what if Detroit stops coming back? And it didn't. Detroit just kept moving. Kept getting better. Even the protests during COVID were good protests. Like they weren't fucking crazy. We didn't have like mass looting. We didn't have that other faction of people. They already burnt fucking Detroit down like fucking decades ago. They're like, we already burned it to the ground. We need to do it again. So we were spared all that stuff. We were spared any of the shit that was seen across the country. We didn't experience any of it here. Detroit was like one of the better cities, in my view. COVID had you doing roofing sales. No shit. That's what they did. They partied. It was very glaring to see the wealthy people, like the real wealthy people with lots of like the fuck you kind of money people. I was shocked. I was like, none of this stuff is like, they just kept on partying. Still waiting here. 12:32. Let's talk about what? We've got the 10-year note auction. The previous was 4.483. Write that down at home as it's released. We'll want it to come in at or above that number, not lower. What do we got here? 10-year bond yield, yeah. I'm looking at it right now. On a daily basis, it's bullish. But on an hourly basis, it's not. What I think happens is we get a down-up move. I think it bleeds down here, erases half of this, and then back up again. Well, that's the prediction right there. Or at least from my side. Yeah, it was all of them, right? But I don't discount, at the same time, I don't discount COVID. People died. I had 2 people die in my family. I have a big family, but I had 2 people die from it. It culled a lot of motherfuckers. I mean, you can't say that it didn't. You can try to cover it up as all you want and assign death to other things. But COVID like ran through all kinds of people. We definitely did a culling. We definitely had a fucking culling. I know we did. Would I buy calls here? No. I'd be shorting it if it ripped, and if it bloodbaths, I'd be buying the dip, one or the other. But I wouldn't be guessing here. No point. You're not going to get an extended run to the upside. They're going to short it right back down on you. And the support is there to buy a dip, so there's no point in predicting here. If we're at like a major low or a major high, I'd just tell you point blank, short it or fucking buy a dip. Where we are right here, we've got great support on Gamma, and you're not going to 440, buddy. 5,400. So Oh yeah, there was it's not even the 65. Like if you were not if you weren't an athletic person most of your life, you had like underlying problems. If you spent most of your adult life sitting in a chair, you were prime fucking candidate. Like you might even look healthy, right? But all those years of hardening veins and arteries, not congenital, but it's like sedentary lifestyle. Was you can see that no fucking way was COVID good for you to catch that, right? That shit was bad juju. Hardening genitals. Yeah, whether it goes up here or goes down, it's you're gonna short it if it goes up, and you're gonna buy a dip if it goes down. No prediction here. If you guys wanted to pin me to anything, I think that the auction is good. Now, let me take a look at. Not that this is going to matter too much, but take a peek at TLT. Mm. 30-minute basis on TLT. TLT's been trading wild as fuck. Yep, 1, 2, 3, boom, turn back around to the upside. Turn back around to the upside. Everybody's long TLT right now. I don't know if you know that or not, but this was the 1, 2, 3 to the downside. They bought that dip. They're looking for TLT to rip some faces off. Nice turnaround on TLT, by the way. I did catch COVID. I got it once. I had all the as a matter of fact, I caught COVID a few weeks after I had my last vaccine. I have the most recent vaccine, but I did not catch COVID throughout the entire pandemic. I missed it. I did the masking up. What I did was I washed my hands. I did the no large gatherings of people. I washed my hands a lot. I wore actual N95 masks, not the bullshit masks, but the real ones. Everywhere. We wore gloves too for a long time. We left our groceries were delivered, and then we left them out in a front room all by themselves. Let's see what happens here. Let's just check. Let me just check one more thing here.
Outcome will influence the scope and nature of fiscal consolidation measures and may increase challenges to policy implementation. So those arose after France's current President Macron's centrist Ensemble coalition lost its legislative majority in 2022 general election, although it did remain the largest bloc in the National Assembly still.
I'm neutral on the report here from the perspective of SPY.
Around the policy setting.
Any squeeze, I think, is going to get sold. Not necessarily sold, but an opportunity to short tomorrow, or at least hedge tomorrow if you own the market.
That brings us now to 5 minutes away from ECB's Elderson, who's due to deliver a dinner speech at the 2024 annual ECB Banking Supervision Research Conference in Frankfurt. And no indication of a text or a Q&A from ECB's Elderson in just under 5 minutes' time.
I did all the stuff they told me to do. I never got sick. I figured that I realized that the vaccine wouldn't stop getting COVID, that it would limit its effects. It seemed like it did for me. I didn't get any of the really horrendous shit that people got. I didn't get any of like the lost taste buds or smelling or smell weird things. I felt really tired for a few days, and I didn't feel like I was on my A game for at least a week or two. It wasn't necessarily. I guess if I rated myself like no drinking, no eating gummies, good sleep and rest, and if I was at 100%, I felt like I was at like 70%, which is not good enough for me. I like to be generally, unless I'm hungover or something, I kind of like to be on point at all times, or at least feel like I'm at a high operating tempo, my brain and stuff, and I didn't feel that. So I was very anxious about that for a bit. Now, since then, I haven't caught COVID. I've only caught it once, but that I've knowingly, or I didn't exhibit symptoms of catching it. I still am slightly apprehensive of large crowds, but it's dissipating at this point. Large crowds in an enclosed space, I'm still like, nah, I don't like that. But it's beginning to dissipate for me. I don't see anything else here that you guys need to know on this auction. France's snap election heightens fiscal and reform uncertainty, according to Fitch. You guys might want to keep an eye out on euro markets. And then for the next day or two, keep an eye on the euro markets. That is an existential threat to our markets. All they need to do is get through with no reform for like 6 months, and they can reform away. The world market's going to crash anyways, so start reforming then. Dutch military intelligence and security services warned today that the impact of a Chinese cyber espionage campaign unveiled earlier this year is much larger than previously known. Since February, the Dutch military intelligence services discovered the Chinese threat group obtained access to at least 20,000 FortGate systems worldwide in 2022 and 2023. Over the span of a few months, at least 2 months before Fortinet disclosed the vulnerability. I think this is a router vulnerability, right? Is that maybe that's what they're talking about? You guys already have JPM CPI reaction function. Citron is Garmin negative per X, while the street is buzzing about Apple's new AI integration. The real loser from their developer conference seems to be Garmin. Despite Garmin trading at historically high multiples, its core fitness products just took a hit with a new Apple Watch OS 11, making Apple Watch the top fitness accessory, including satellite messaging, training, load features, and comprehensive vitals tracking. Garmin's fitness products have become less relevant. Credit to Garmin for evolving from personal navigation devices to its current state, but it shouldn't be trading at historically high multiples as its fast-growing fitness segment just hit a wall in Cupertino. That's a fair assumption.
$1.3 billion.
Or not so much that it's a hit a wall, just that's probably priced in. And I doubt that Garmin is going to be investing in AI themselves. I guess they can
Do you want to stay up to date with the latest?
Sub it out.
The bleeding edge of news for non-farm payrolls?
Maybe that would be the turnaround for them.
Our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
So we've got Nick Timrose saying what I was reinforcing some of what I was talking about. So Nick Timrose saying investors will obsess Wednesday over whether Fed Reserve officials pencil in 1 or 2 interest rate cuts this year. Fuck yes. They will. 100%. And I'm a little perturbed with the investor. What does he mean by investors? Retail? It's not just retail. The tone of this Fed rate decision, he will be pressed by reporters. He will be pressed. He's going to be pressed about recession, and he's going to be pressed about stagflation, depending upon the speak. I don't think it's us. I don't think it's investors necessarily, but the reporters are going to press the issue if he doesn't address it, because there are cracks forming. And not only that, employment is very fragile right now, in my estimation. For policymakers, difficult decisions and looming divisions over whether and when to cut interest rates are a problem for later, not right now. Instead, the fixation on the quarterly rate projections obscures remarkable cohesion among rate setters over their wait-and-see stance. This is a problem to me. This is a real problem. This is like dodging and weaving with buses. This is like playing Frogger back in the day. There's a fucking bus out there with the Fed's name on it, dicking around with this stuff. After concluding a rapid series of rate rises this year. So the implication here is that the Fed is going to, the Fed can over-tighten for a moment. I don't think they've over-tightened yet, but I think the extreme rise in rates, right, over time, the rate of rate increases over time is too fast. It's been too fast, too high, too fast. So you got to rein it in a little bit. And then come back and hit it again down the road. That's my take right now. Can we take more rate hikes? Yes. But at the moment, no, we do risk recession. We need to repair that employment market a lot more, in my opinion, and we should be able to run the economy hot to do it. To harden up employment at least. Now, Timrose is trying to say to you, no, they know what the fuck they're doing. Leave them alone. Let them keep riding that wave. I disagree. I think that's over-tightening for the moment. Due to the path of rate increases, the speed of rate increases that we took. So the initial fucking gut punch worked, in my estimation. We're pretty much there. And so I think they need to lay off a little bit, just a little bit. Now, I know that if they lay off, we already discussed this, right? The fear is that there'll be fucking panic created, or there'll be a major roll in the market, even if they are going to raise rates again down the road. It could damage the market that they don't want to damage right now. I don't know what their probability is on that stuff. They're probably doing the math themselves, and they think that they're better off running with, data-dependent bullshit. No rate change. They Timrose also saying after concluding a rapid series of rate rises last year, the Fed officials remain widely united that the best course of action for an economy with solid growth and inflation still running somewhat above their target is to make no moves. In effect, they are taking the summer off to evaluate.
At the top of the hour, the US is due to sell $39 billion in a 10-year note sale. So the prior bid to cover was 2.49. The prior high yield was 4.483%. So looking at a preview from this, JP Morgan strategist in an end-of-day note yesterday said that additional concession would likely be needed for the auction to be digested smoothly, citing the recent pattern of tails and proximity to tomorrow's CPI report and Fed decision, despite attractive valuations. Also noting the latest CFTC positioning data ahead of this 10-year note sale, it shows that speculators were net short 197,000 ultra 10-year note futures, a possible source of covering demand.
So Timros also saying, after concluding a rapid series of rate rises last year, Fed officials remain widely united that the best course of action for an economy with solid growth and inflation still running somewhat above their target is to make no moves. Now, this is false. This is actually false. If you dig down deep into the data, not necessarily employment or wage. Well, number one, wages and employment are just now trying to break out to a healthy, robust employment picture. It is not there yet. It is not there yet. And if anything, it's looking to reject the downside, which is negative. And a healthy, robust economy is not true either. There is some erosion going on under the surface if you begin to dig deep in the data coming out. I don't know what he researched to write this shit, but it sounds like garbage to me personally, what he wrote. In effect, they are taking the summer off to evaluate how hiring, spending, and inflation are faring 1 year after they lifted rates to a 2-decade high. So the idea here is from Timros, he's saying Fed will do nothing. They'll wipe their hands. They'll take the summer off. They'll come back in the fall to reassess. You know, I'll tell you what. You think about this, right? Take the summer off, take the fall off, and Timros is saying they're going to readdress it in the late fall, early winter. That's 6 months from now, right? That fucking economy could be on fucking fire at that point. And then you get your, multiple rate cuts. We over-tighten, that kind of stuff. I don't know if the Fed's in that mode right now. I'm going to disagree with Timros on this. I hope that the Fed doesn't do that. I really do. I think it's a dangerous thing to do for the Fed down the road, saying we're going to sit back and watch it, how it unfolds into the fall and winter. I think there's some prep here. I think the prep, let me get this out to you because I think I've told you this before. I think the prep conversation tomorrow from Jerome Powell has to do with letting the economy run hot. Listen to that closely. So he's going to introduce to you, not what the fuck this, you should want to call him I'm not going to say it. Not what disregard is saying to you. But I really, truly think that Jerome Powell is going to come out to you and he's going to make the case that in the future, not tomorrow, but in the future, that it might be okay to let the economy run hot. For you to digest and discuss amongst not you and I, investors, but Main Street John, let them discuss that through the summer and fall. Into the fall and winter. And I think who's that guy the other day that already brought it up? I forget who brought it up the other day, but one of the Fed chairs was like sprinkling it out there for you. It was like, do you really want a recession? Or do you want to let the economy run hot? And he also said, you might think that you want a recession, but historically it hasn't helped. So letting it run hot is probably the preferred Fed method at this point. You know what I'm saying here? So if we continue to see erosion through the summer and the fall and the winter,
the US is due to sell $39 billion in 10-year notes. The prior bid to cover was 2.49 and the prior high yield was 4.483%.
So I'm going to go against Timorous on this. I don't think he knows what the fuck he's talking about. I don't think he actually reads the data. I think he just reads the headlines and the headline fucking reports and goes, yeah, everything is fine. Everything is fucking awesome. I'll tell you what, if you don't do I'll say this, if you don't do anything and you leave rates where they are into the fall and winter, the economy will erode to a point where they'll be forced to cut rates December, and it'll go to fucking zero by March or April. We will be burning by March, April next year. You can mark that shit down. Which is it's kind of timing wise, kind of makes sense. I guess if you want that self-fulfilling prophecy. 4 minutes until we got the news. What else we got here? Ten-year note auction previous was 4.483. Let me know in the why don't you guys give me right now, give me your letter grades before it comes out. A, B, C, or D. A minus, B plus, whatever you want. Write it in the chat. A C. Whoa, C minus. Fuck. Oh, C minus. Woo. Jeez. D. D for danger, Snow Pinky. Let me line it up. Hold on here. You guys are fucking hilarious. You guys are gnarly. D for doom. Jesus. You got you. We'll set the music up just in case. We're not going to play it though. We're going to pause it here. C, yeah, C's pretty bad. It's not as bad as D. This is about a C letter grade right here. That's a C letter grade right there. That's a D. And F, fuck you all the way down here. An A right here, and B-ish right there. Like no, B plus, like right here.
Expecting the results of the US 10-year note sale. The Treasury pre-sale when issued yield comes out at the top of the hour. Auction results follow a couple of minutes after this.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Almost ready, boys and girls. I've got no consensus on this. 10-year yield.
Treasury when issued yield 4.458%. So again, that's 4.458% for the pre-sale when issued 10-year yield. Shortly expecting auction results now. Should be around 1 to 2 minutes.
I've got 4.483. Maybe that's a forecast, 4.45. Nope. Tesla week down in the dumpster. Sad Tesla down here. It's being chart Tesla up for you. Come on, financial juice. A little bit of weakness here. No result yet. Trading 534.41 right now. Still not seeing any result here yet.
Bid to cover ratio 2.67, 2.67. High yield 4.438%, 4.438%. So the US sells $39 billion in 10-year notes and awards 43.69% of bids at high. Primary dealers take 11.59%, direct 13.81%, and indirect 74.6%.
B.
Seeing some downside in
B
dollar,
plus
upside in stocks.
I'm missing it here. I don't know if it's an A. It's close to an A. The previous was 4.483. The actual is 4.438. I mean, it's pretty fucking good. B plus, A minus. Fairly good auction. Not a bad auction in any way, shape, or form. What else I got here? Fed bids for 10-year notes total $1.3 billion. Almost in line, within a 0.1%. They got Andy Constant gives it an A, so Andy Constant saying it's an A auction. I would go with Andy over myself any day of the week. Upside target. Well, it needs to be right about there, just about there. You got the high tick. That's all you need. Now your next target's going to be 535.80 maybe. Now remember, the only thing I'll say to you here is that at times these auctions are not really built for bulls per se. They don't often result in upside targets like downside targets. If you have a bad auction, it's like bloodbath. Down 15 to 30 points, blink an eye. On the upside, it can be muted returns on the upside. So be aware of that. You did get a new high here, though. That's good to see. That high and that high, you beat it. So we'll see if we can catch another rip as the 1 minute trigger is coming up and crossing the hourly trigger here. See if we can catch that hourly trigger, that 1 minute cross, and get another squeeze higher. Watch that 1 minute trigger as it comes in to cross the hourly trigger. God, even the fucking, you know what? Like, I'm looking at the options chain right now. They got 536 as 17 cents at 1 in the afternoon. They're saying no higher than right in here. Watch the back check here in the hourly trigger and the cross of the 1 minute trigger. I don't know why I never charted that out, like that doom and gloom with that green bar. Tesla charted out for you there. 189.86, a little bit lower right there. Nope, we're going to break above it this time.
Extend gains
going over 190. Okay, Rodin, 190 it is. We're breaking above 190. Discounts on Tesla right now. I own Tesla, by the way. I think that's all we got today. We've got 4:30. We get API crude stock or crude oil stock change. Tomorrow in the morning we got some mortgage stuff, but don't forget we've got CPI in the morning. Ten-year note yields drops towards their lows following a strong 10-year note auction. What else I got here? ISM manufacturing. So Bloomberg's discussing this today. Fed's higher for longer stance hits firms that expected rate cut. 100% it did. ISM was terrible. ISM, like a lot of the data here in the back. So Bloomberg's talking about this right now. They're saying Fed's higher for longer stance hits firms that expected a rate cut. And they're bringing this stuff up just today. See if I can have you listen to this.
Well, I don't think there's much of a trade on treasuries. You know, to my way of thinking, the 10-year, which is close to 4.5%, let's call it 4.5%, is dependent upon inflation, which we'll see on Wednesday, and we'll know more because of that. But if inflation is 2%, I think the 10-year belongs close to 4%. If it's 3%, it belongs closer to 5%, and we're right in the middle. So at the moment, with 4.5% 10-year treasuries and break-evens at around 220, you know, that's a 470 basically break-even for the nominal 10-year treasury, and I think we're about there. There's not much to be done until we know more.
Bill, what are the chances that we see, say, the median dot in 2024 and 2025 actually move higher? I mean, do you think there's a possibility, and what would be the reaction to something like that?
Well, I think it would be negative. You know, the Fed has basically signaled they're sort of done, perhaps 95% done in terms of raising rates. It's not that they can't raise them if the print on CPI isn't bad for the next several months. But, you know, I think the market basically anticipates the Fed to stay, and maybe in September, maybe in December, maybe one or two cuts if, you know, the current numbers continue as we've seen them.
I am curious, Bill, when we talk about all the moves that we've been seeing in the bond market as of late, particularly in treasuries, as people try to sort of game what the Fed does next, is there still a strong correlation between what we're seeing there and what we're seeing in the equity market, or is that kind of splintered?
Yeah, I don't think it exists anymore. I mean, for years, I've followed the correlation between the two, between real interest rates and stock prices, between the Fed funds rate and stock prices. And, you know, as we've seen, you know, the Fed raised their short-term rates over the past year and a half or two from close to 0 to now 5 3/8, and the stock market basically has neglected all of that in terms of the rise in not only nominal but real interest rates. So, you know, the correlation is broke down as more of a momentum type of market. Actually, it's a very momentum-driven market with AI that you've just talked about. And so
Okay, so American, I'm going to read this to you now. This is American businesses and consumers started the year thinking interest rates would finally come down, making big plans to buy equipment or a house. Now all of that is on hold, slowing large swaths of the economy for the foreseeable future. In Michigan, a maker of cutting tools has delayed as much as $1 million in spending this year on new equipment. In Atlanta, a woodworking machine maker says some customers are trying to extend the life of an apparatus. When progress on inflation stalled early this year and the Fed Reserve officials decided to keep rates at a 23-year high for longer, it forced companies to rethink investments in capital expenditures, inventory, and hiring. So remember, we went over this about a week ago on the stream and in a market brief. On Wednesday, policymakers are expected to keep borrowing costs steady again after their two-day policy meeting in Washington. For businesses, the pain is showing up in data. S&P Global Market Intelligence projects capital investments in manufacturing will rise by only 3.9% this year, down from a January estimate of 6.7%. U.S. business bankruptcy filings increased by more than 40% during the past year through the end of March.
$449 billion at the Fed Reverse Repo operation.
Are you done? While personal filings rose 15%, according to the Administrative Office of U.S. Courts. This is not good for GDP, is it? In no way, shape, or form is this good for GDP. It's not good for employment either. So this is why I'm telling you that tomorrow the Fed needs to really thread a needle on how it addresses other data that can have material impact, sending us into recession down the road here through maintaining high rates. And especially with this Timorous thing with, fucking let it run for 6 months like this. Timorous saying let it run until fall or winter with no discussion about it. It's kind of batshit crazy to me. And what we run into is an over-tightening effect. Even if we need higher rates, higher than they are right now, you have too much without a relief valve of some kind to come into play at some point. Now, I don't know how you do that. The market may react one way or the other to that. If you start cutting rates, people start panicking, thinking that we broke something. It could turn into a result the Fed, of course, does not want. In a June 5th report from the Institute of Supply Management, a majority of respondents in the services sector indicated that inflation and current interest rates impede improving business conditions. Now, that's after reporting feeling optimistic in January about the potential impact of interest rate cuts. Anthony Neves, chair of the ISM Services Business Survey Committee, said in statements, the Fed's decision to keep rates higher for longer than expected is also sowing uncertainty around the world, while further squeezing debt-strapped consumers and delaying home purchases. On delayed equipment purchases, quote, you definitely have to pull back the reins when interest rates are high, said Patrick Curry, president of the Michigan-based Fullerton Tool Company. We have to hold off on some of that and try to make the best with the existing equipment we have. Any of you out there watching this program right now that have ever worked as a department head in a large corporation, you know these conversations, right? You know your C-suite comes down. If you're a director of any kind out there, you know they come down and they tell you, they give you your budget, and they point blank tell you, don't they? When we're in a tightening cycle, you know that they come right into you and they say to you, this is your fucking budget, live in it. And then you know that when we're not in a tightening cycle that they like to party, right? They'll give you money to spend within your departments. But you can see the direct correlation of this inside of a company if you're a director of any sort. Or at least in my experience professionally, that's what I noticed. It was fairly easy to see. And some of these companies will extend that even if you do get the cut by 3, 6 months, 9 months out, like a wait-and-see approach after the death and destruction is done to the economy. With 2 facilities in Saginaw, Michigan, and 1 in California that make cutting tools for aerospace, automotive, and medical fields, among others, the 81-year-old Fullerton has delayed about $1 million in spending on equipment upgrades, and customers are not buying as much equipment, Curry says. The ISM's May 15th economic forecast showed that company leaders expect only a 1% increase in capital outlays this year, down from its December 2023 estimate of almost 12%. Capital expenditures for U.S. manufacturers falls. Reported annual increases, 2024 forecasts. I mean, it's a fucking bloodbath versus what 2021 was, 2022, and 2023. So the hurt trade is 100% there. I'm going to show you briefly this graph. And I want you to see this right here. When Jerome Powell tells you that he thinks the damage is being done, he means it. The data supports that just with this chart right here. Just this chart right here. Hold on here. Just this chart right here, point blank, is showing you the destruction being done to GDP that likely won't show itself until we get into end of year. Get back to the main screen here. Uh-oh, what's going on over here? We got the cross of the 1 minute trigger. Got a little bit of back testing going on the hourly trigger. Got the 5 minute coming up right now. This looks like that same shit, right? We go up and then go all the way down to the 5 minute, up, then all the way up to the 5 minute. Ooh. Hot sausage over here. Woo! Trumpeting them bulls. So there is like under the surface here, I'm telling you, under the surface, right? If you look at the data, all the data that's come out as a whole, and you start to look at it over 6 months, 3 months, 6 months, a year, in some cases, decades, there's real danger here. They're playing with fire, I'm telling you. They're playing with fire right now, the Fed is. And if the Fed is going to come out and tell you they're going to look back on it in 6 months, if I was a reporter, I would be asking some pressing questions because the data says otherwise. The data says that this rate hike cycle has done its fucking job. It has literally done its job. The job that they're mandated to do, it's been done. And inflation should show up as coming down in year over year, months down the road. So if they're going to anticipate something, it looks like they're there in my case. My view here, too, I got to say this, even just reading this article right now, is this is a prime time for a surprise rate cut. It really is. I don't think you're going to get it, but this is it. We are there. We are 100% there. Now, I agree with like the election shit and the timing of everything, not being there for that. Like the expected roll next year and the housing cycle end could play a factor into this. But we are fucking there. Make no mistake about it that we are there. Now, you might be making the argument out there, well, Cap, I want something disinflationary. Cap, I want eggs to be back at 99 cents. That's okay, but that's not what the mandate is. I can understand what you want. That's not their fucking mandate either. Their mandate was never like bring it back to 2%, then make it negative 4%. That was never the mandate. So if that mandate changes, I'm with you on it. But as of right now, they're pretty close. And when they begin to over-tighten, those effects are seen down the road. So you look 6 months from now, 9 months from now, if the Fed takes that stance of do nothing and we're not going to do shit, we're not going to change our Fed speak either, it could be a negative on the market. It could be perceived as we've got bad shit coming down the road. That they have not only over-tightened, but they're asking for 6 more months is a little fucking too much. So it really is a little too much. So I think the best course of action for Jerome Powell really am coming back to that he has to introduce at least a discussion to get out in front of Main Street USA that they're going to have to accept one or the other. You're either going to have to accept a recession and know that the outcome is not as positive as letting the economy run hot for a period of time. So I think that the threading of the needle tomorrow is going to be important here. Investors are pricing in about 1.5 rate cuts this year, assigning roughly even odds on a first reduction in September, according to futures. If the Fed, that's ball gambling anyways. That means nothing. Doesn't mean jack shit. It's just gambling. If the Fed begins cutting rates around then, business and software investment should pick up in the latter part of the year. So now they're saying, we can live with cutting rates in September. That would help us out. We're going to cut rates in September, and they're going to take the summer off, then that would lead to a discussion tomorrow from the Fed introducing a rate cut, talk of letting it run hot and cutting in September. So if the Fed begins cutting rates around then, business and software investment should pick up in the latter part of the year. Equipment and Leasing and Finance Association Chief Executive Lee Litt said in a release, just north of Atlanta, there's still demand for heavy saws and drills used to make cabinets and furniture, said Blair Chandler, manager of equipment finance and leasing at SCM North America, a woodworking machine maker. While larger clients are still moving ahead with purchases, the company's smaller customers are trying to extend the life of old equipment, Chandler said. We also know that's going on in our used car industry, right? If you guys, we're at the highest, or how should I say this? We're at the largest number of vehicles that are at an older age than ever before. People are extending the life of their vehicles longer than they ever had. Some of that has to do with the vehicle as well. But nobody is buying new vehicles right now. Nobody is. People are just like, fuck it. Even myself. Matter of fact, I just did a ton of work on a vehicle that we own to extend its life, and it's not just its life, but it's like quality ride and everything for another 5 years. Not that I don't know we'll have it for 5 more years, but I did the work that I would never have done. Number one, I would have sold this vehicle at this point, and number two, I never would have done the work that was required to put it in like an excellent used condition. Big work on this vehicle, thousands of dollars, rather than going and buying another used version of this vehicle. It's not a car, but I would never put that investment in the used vehicle of that year to ensure that that vehicle was as good as a 5-year-old car or SUV or whatever. Spiking borrowing costs. Small businesses are also buckling under the strain of high loan rates, persistent inflation, and wages, which are still growing at more than 4% a year, according to government data through May. Some 6% of small firms said financing was their top business problem in May, the highest share in nearly 14 years, according to the National Federation of Independent Businesses. Default rates on loans to small businesses in April hit an annual rate of 3.2%, matching their highest level in at least a decade, according to credit bureau Equifax. Companies are also feeling the pinch of adjustable rate mortgages. Who the fuck is getting an adjustable rate mortgage?
So the U.S. Department of Justice
Jesus
says 4 additional
Christ.
states, being Indiana,
Be out of your
Massachusetts,
fucking
Nevada,
mind
and
getting an
Washington,
adjustable rate
joined
mortgage.
a suit against Apple for monopolizing the smartphone market.
Adjustable rate mortgages. Smoking crack. Loan. I don't want to hear any reason why that's good. Yeah, like what the fuck? Dude, I just read some shit the other day about, we're going to rip, by the way. We're going to fucking moon right now. I just read some shit the other day that blew my fucking face off. Literally blew my, that door is open, by the way, right there. Whoop. I'll tell you about it later. It's about these apartment fucking investors. Oh, God, fucking make my head hurt. Like, literally reading this made my fucking head want to explode. So, like, they're circumventing the rules put in place in 2007, 2008. Fucking committing fraud once again. Too good to be fucking true. Anytime, I want to tell you guys something. I want to tell you guys something. There's like two voices. Two voices, okay? You're going to see someone out there tell you, investing in real estate is not as easy as people make it sound. That's a crock of shit. It's a crock of shit. Investing in real estate is simple. Anytime you hear that, that means that they did not fucking invest in real estate the proper way. Means they were cutting corners somewhere. Every fucking time. They cut a corner. I don't care what it is. There's a list. Right? It's not that big. It's basic shit. But they definitely cut corners. They were either absentee. They fucking live across the country. That's absentee, I guess. They fucking, they're overextended. They didn't inspect the property themselves. I mean, like, you walk through it and you know what you're looking for. Like, foundations cracked in half shit. You can't fix the main water supply or the main drain yourself. It needs so many fundamental repairs that you'll never get a right side up in it. You're not renting to the right class of people. There's all kinds of problems. You paid too much. You know, you try, like, I used to meet flippers, and they'd go into, like, a really nice community and be buying, like, $300,000 house to flip for $5, $150,000, $200,000 house to flip for $3 or $4, and they'd be doing it on fucking credit. I kid you not. I'd meet people doing this stuff, and I'd be like, "What are you doing?" I'd be like, "You're like one bad fucking quarter in the economy away from getting fucking torched. Where'd you get your money?" "It's a loan." And you're trying to flip this, right? Can you rent it? Can you rent it for what you're investing in the flip? If the real estate market in higher end markets is very finicky. We already know that, right? We just dumped a bunch of markets like 30%. Can you live with owning that and renting it out? And then how about the people that are going to rent from you? People that rent homes for a lot of money typically are some of the worst renters you can get. Did you know that? Probably not. Anyone renting a house for, like, right now for like 5, 6, 10 grand, fucking sketchy as fuck. Not always, but oftentimes, there's some of your worst renters. I don't know if you know that. and your number of people that can rent those properties is small. Really, really small. I'm telling you. Some of your worst renters are the more the wealthier your renter, sometimes the worse off you are. They skip town. They don't give a fuck. They just don't give a fuck. They're flighty. They have better things going on. They'll break a lease like it's nobody's business. Even if they're paying you, they'll break a fucking lease. You want a fucking married family. I don't care if it's 2 men, man, woman. I don't care. You need a fucking family. You need that family to have some goddamn kids. So they got bills they got to pay. And you want them to have some kind of a license. Like, I'm an AC mechanic. Okay, show me your license. I'm an RN. Let me see it. Let me proof that you are an RN. Those fucking people go to work every day. They go to work every fucking day. They break their dicks. They break their boobs or whatever. They're tied to a school system. They're tied to a community. They're trying to make friends. trying to look good in the neighborhood. I'm telling you, those like salt of the earth people. And your second best renter, if you're in a state with reforms on Section 8, are outstanding as well. Section 8 is not what it used to be. It's usually a pretty good renter, generally speaking. And you get a confirmed check every month. Boom. Checks in the mail, checks in the mail, checks in the mail. If you buy those houses in a decent area, you can usually win out pretty well. You can usually get a house for like, I don't know, with a renovation like 50, 60, 70 grand, making there's a sweet spot too, like 1,000 square feet, 3 bedrooms, 1 bath, fucking right, like 1,000 to 1,300 square feet. 2 baths are even better. If you get 2 baths and 3 bedrooms, it's a sweet spot. Make like $1,100 a month, $1,500 a month, every fucking month. And if you live there, you can take care of your property, right? You're part of your community, part of the neighborhood. You know your neighbors. You own the house there. Tenant has any issues, you can fix it. You know, tenants, if you can fix stuff for your tenants in person and be like, hey, let me go fix that for you. You got a problem? This broke. This, you need that fixed. You want to do your own improvements. You're not doing flipper hack special shit. Fucking some of the fucking flipper shit I've seen, I'm like, what the fuck? They do that. You know why they do that too is because they got cheap ass home maintenance contracts. It's gross. They pay like a monthly fee, and then the worst work gets done. It doesn't get fixed for 30 years. It's all fucked up. It's all about those revs coming in. Revenue. Anyways. Companies are feeling the pinch of adjustable rate mortgages. Loan rates for the Gustamo Group, a Denver-based restaurant company, will double to as much as 8% starting in 2 years. That's no small pocket change. The company has loans of as much as $3 million in some of its properties. And Peter Newland, the company's chief vision officer. So just right back on this whole subject, there is a house in this country for your budget anywhere. Anywhere. You can find a house. If you're like, hey, Cap, I don't have a ton of money, but I want to get in real estate. I got 25 grand. I can probably show you 5 markets you can buy at 25K. Move your ass there. Spend the other 25K in the material and rebuild that fucking house all by your own sweat equity. You own that house outright. You're paying the fucking taxes on it, and you rebuild it. I assure you, your risk for that investment is like minuscule. You might have something bad happen, get a bad tenant, get a water pipe burst or something like that, but yeah, with insurance and stuff like that, you're pretty much gonna skate by. It's one of the best investments you can make if you do it right. So whenever you hear people say shit like, oh, woe is me, this happened, real estate market's harder than I thought, that's bullshit. These are people that are overextended, taking on way more fucking risk than they need to for shitty returns to just have revs coming in. Just like the money flow is what they're looking at more than anything else. So anytime I hear that shit, I'm like, fuck you, you don't know what the fuck you're talking about. That's not what wealthy people do. Well, they do that, but they do it in a much better way. They own their shit. They leverage assets. They loan that money to you. And you default and they take it back. That's fucking wealth. They're doing it again right now. What they're doing is they're circumventing right now. What I just found out was that what they're doing is they're getting a fucking huckster. The huckster comes out and tells you, you got $50,000, you got $100,000, you got $1 million. Let's pool it all together. You don't have to worry about anything. And what we'll do is we'll get some money. We'll take a loan, right? We'll go to Wall Street. We'll get some backers. We'll catch another $50 million. We'll leverage all that shit. Snort some cocaine. We'll start buying up apartments. Bunch of buildings with apartments in them. What are we going to do? We're going to fucking flip them. Then they can't flip them anymore. Look at Austin. prime example, right? Now you got a deluge of apartments everywhere, and you're like, okay, the rents are coming down, and we got all these mortgages everywhere with leveraged money. We can only command $1,000 a month. Oh shit! And we need capital. We need money coming in. Money. Always new money. Always new building. You know, and so if those guys can't do that anymore, they're fucked. They're super fucked. So actually buying property with cash, own that fucker outright. You'll never have that problem. Put a renter in it. The renter's always coming in. You're in a working class neighborhood. People always need a place to rent. It's a very, very lucrative investment, real estate, if done properly. Even if the loans don't reset immediately for another year or more, they're coming, Newland said. They're coming for him with his adjustable rate mortgage. Meanwhile, rent, that's not all. There's more to it than that, which is what I just discussed with you. Meanwhile, rent is spiking by as much as 30% at the property's Gestamo Group leases, which Newland attributes to landlords passing along their own higher borrowing costs, right? That's not always true either. We pass that along even we own that shit outright. We go with the market. That means that I do better, don't I? If I own the property outright, I get the 30%, don't I? If I have the 0% interest rate that's fixed from 10 years ago, right? I'm passing along that 30%, but I ain't suffering from it, am I? That comes as customers are cutting back on spending following a banner year in 2023, Newland said. Small business optimism remains below 50-year average. It's actually not a bad thing, though. Small business optimism is at a low, but it looks like it's going to rise if we do cut rates at some point. In Tampa, Florida, Dilip Kanji, longtime owner of hotel company Impact Properties, has paused plans for 3 new hotels until borrowing costs drop. What does this imply, right? This is all sounding like business owners are just begging for interest rates to come down for another booming economy. Some of you out there, the old timers here, are like, nah, fuck those guys. Let's run them down. Let's scrub them from the system. Let's get them out of here right now. No more second, third chances for those guys. Let's let the kids in. If you're young right now, you want that, right? You want higher rates for longer, wash all these pricks out of the system so some money is freed up for you down the road. Like other hoteliers, he has renewed loans on some of his properties at much higher rates and can shoulder the cost for now. But he's going to play it safe. Quote, we're just waiting for a little breathing room on debt to get those projects going. The pain continues. For U.S. households, debt reached a record $17.7 trillion in the first quarter of 2024, according to a recent report from the New York Fed. Consumers think their financial pain will continue. Only about a quarter of respondents in the U of M's Consumer Sentiment Survey now expect interest rates to fall this year, versus 32% in April. Overall, U.S. debt reaches record level with record rates, right? We've talked about that, right? We've got government spending going into an election year. We've got tightening going on, which dampens GDP down the road. Among companies' expectations are equally grim. On June 2nd, the ISM manufacturing report showed further contraction of the U.S. factory activity in May. On a call with reporters after the release of the report, Timothy Fiore, chair of the ISM Manufacturing Business Survey Committee, said uncertainty is the devil of business. And that's exactly where we're sitting today. So, if you're watching this program and you're young, if you have your Main Street hat on.
Reporter on Twitter citing sources, Hamas has given Qatar and Egypt its official response to Israel's ceasefire proposal.
And if you're young and you have your Main Street hat on, you want the tightening to continue. Why? All these people that just cried and whined that I read to you, their experience means that they fucked up. They over-leveraged themselves in speculation, and they're caught right now, and they're fucking scared. They know what's coming. They're going to get rolled and washed out of the system. Eventually. This year, next year, the year after, don't matter. You keep those rates high enough, they're going to start folding. They already are starting to fold. We see the bankruptcy proceedings or instigations already on the rise. Now, our system, our long and short-term debt system, is built to wash these people out. We give free money, or theoretically, we give you free money, right? You're young. We say, here, free, interest-free money. Lending is easy, too. You don't have a lot of credit. You don't got a lot of this. You just graduated. You don't own a house. Oh, you don't own a business. Well, we're kind of loosey-goosey right now. We're going to take a chance on you. That's because the Federal Reserve is making money easy, right? Money is a wash everywhere. So I take 10 young people and I say, okay, I'm going to give you all $100,000. So like 10 years, we got 5-year check-in, then we got another 10-year check-in. We're in one of those check-ins right now. We're coming into it right now. So that's actually 20 years. Now this 20-year long-term debt cycle, and we're taking a look around and we're like, have we washed out we washed out the Nikola guy? Did we wash out the guy from the exercise bike company yet? Has he gone bankrupt yet? Nope. How about these people that are doing all this risky, highfalutin, cocaine-fueled shit for the last 10 years? Do they make any money? Do they save any money? Do they have reserves or do they not? And so your Main Street hat is, fuck no, they're all rich. Look at them. They got all the fucking wealth. If you're young, you're like, old people own everything. Businesses are allowed to operate doing shitty service, shitty products, not paying anybody, scraping the barrel everywhere. They don't want to improve anything, right? Nothing's improving, is it? Are any of your experiences right now improving out there? Fuck no. None of your services, none of your products. Quality is down across the board, right? So all these fucking leeches out there are allowed to continue to operate and hold on. So what does that mean? From being from Main Street, young with that Main Street hat, you want to see those fuckers burn, don't you? Wash them out. So they're out of the system. This guy over here, what's this asshole's name? Dilip Kanji from Tampa, Florida. That I just read from you. Him, we washed that motherfucker right out of the system. That asshole have bad credit. He'll be kicking a can down the street. His wife's going to leave him. The kids are going to leave him. He's going to rent a fucking motel room for the next 20 years until he has to go to a fucking... serious. He will never own another company again. They will run him out of the system. And the next cycle, when there is money available, he won't have his fucking hand up because his credit's destroyed. He's too old. You understand what I'm saying? And that's how our system works, theoretically. So you as a young person want to see all these assholes get washed out. Or if you have your Wall Street hat on and your greed hat on and your trader bull hat on, what would you want to see? One more cocaine job. Cut 25 basis points, run us up into 2025 and 2026, max this fucker right to the fucking moon, and then we'll crash it with a bunch of rate increases. Yeah, I'm long right now. Let it all coincide with the debt cycle. It's 20 years. Let's whore her out one last time. Let's ride the pony, baby. So this article right here, this is the this comes from Bloomberg as well. This is Fed's higher for longer stance hits firms that expected rate cuts. What else we got here? Only Apple will try to rebrand AI. Will it succeed? You're fucking right, it'll succeed. It's the closest thing to them doing a phone than they've ever had. What else am I reading here in the background? We should talk about CVS at some point. Some discussion about CVS here. Plug Power has been all over the news. I never highlighted that. I should have. That's all I got so far. That's all I got right now.
State. We've got a long road to go, and I will not stop until we have a new bridge, a new Francis Scott Key Bridge built and overlooking the skyline of Baltimore. But this
is Governor Westmore from Maryland speaking right now about Baltimore shipping channel fully reopens.
Well, you do have a lot to be proud of, Governor, and the heroic actions of the public safety officials in Baltimore and the state of Maryland, including the divers who have been risking their lives to comb the bottom of the floor of the port. Remarkable stories to tell. But then it becomes a question about money, and we've talked about this before on Bloomberg. In fact, we had a conversation earlier with Republican Congressman Patrick McHenry, chairs the House Financial Services Committee, and we asked him directly about the chances for a supplemental budget to rebuild the bridge passing this Congress. And he talked about
try to take the money somewhere up in here before we get up here.
We're spending too much. What are you hearing from leaders in the House about that, making that happen to rebuild the bridge?
Just so you can see here.
You know, I've been incredibly encouraged by the amount of bipartisan support that we've received. You know, people from
a little bit of risk at 53,518.
Also, people from Chair Womack and Chair Cole from Oklahoma and from Arkansas and Oklahoma, respectively. People who have said we understand the importance of getting this bridge rebuilt because it's a core artery for the Port of Baltimore, which is indispensable to the American economy. And what we're asking for, the 100% cost share, is not saying, oh, the American people are going to pay for it. I'm very confident that the American people will be made whole. When you look at everything from insurance to potential pending litigation, Lloyd's of London has indicated this is going to be the most expensive maritime tragedy.
That was a nice tick right here. That was 10 cents on 536C.
Cost share.
Now one push right there.
Bridge financing. It's saying that while we're going through the process of a potential litigation, which we know could take years, we've got to get moving. We've got to get building, because my commitment to the people of my state and the people of this country, frankly, is that we are going to build this thing on time and on budget and effectively, and we're going to get the Port of Baltimore going again because it's important to the largest supply chain of our nation. But we've got to get moving. That's the importance of the bipartisan support for the 100% cost share, and we've been incredibly heartened by the amount of by the encouraging words and supports that we've received from members from both sides of the aisle on this issue.
Maryland Governor Wes Moore talking with us last month about today's development now. This week, at least, the Port of Baltimore's main shipping channel fully reopened. I'm Joe Matthew. Kaylee Lyons, I'll meet you at 5.
Got a nice microphone.
Edition of Balance of Power on Bloomberg TV and radio.
A really nice microphone.
The world needs ways to reduce carbon emissions,
especially for heavy industry.
Department of Justice, 4 additional states, Indiana, Massachusetts, Nevada, and Washington, joined the Justice Department's suit against Apple for monopolizing the smartphone markets. I wonder what they're going to do now. They just dump that fucking 4 cents right there. Fucking dealers, dude. That's all I've got on Apple right now. One more push. They're not wanting to pay over like 30, 40 cents in here. It was like up 10 cents, down 5 cents. HYG about to explode to the upside right now, too. HYG with a target of 77.09. HYG looks great right now. 77.10-ish, somewhere in there. I'm wondering if Apple will go up there and break above, or at least trade will Apple trade 208, 209, somewhere in there? It's digesting right now. Oh.
Is higher than people think.
Bloomberg. Context changes everything.
Miami Diamond talking on Bloomberg just then.
$1 trillion industry. There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. I'm Carol Masser along with Tim Stenivek. And let's get to the setup at this hour on this FOMC Eve. I mean, Fed officials already meeting, but we won't get the decision until tomorrow. It will be the 4th policy decision by the Fed, Tim, so far here in 2024.
Okay, ahead of that decision, which we'll get tomorrow, and of course an updated dot plot, bank stocks are sliding. That's weighing on the overall trade. We're going to have more on the trade in a just moment. Speaking of the trade.
Speaking of the trade, not sliding, everybody. Check out shares of Apple actually hitting a record in today's session as investors who weren't impressed
French central bank sees 2024 HICP inflation.
Watch out here.
5%, 1.7% in 2025 and 2026, all unchanged. And they see Q2 quarterly growth of 0 to 0.1%.
of it for his dad, of course, President Joe Biden.
Yeah, we're going to get into all of that, break it down.
And they see 2024 growth of 0.
That's 43.58 right there, or 53.88.
The bank
could be topping here soon.
GDP forecast to
A little bit more squeeze up here to 53.71
Before we get that going, first up, let's get a check of the day's
I don't know that we get this high, though. I don't think we get this high. Maybe.
Moving parts, and we've got you covered. Right now, U.S. stocks are trading mixed. The Dow, the S&P, they are both lower. S&P down 3, down less.
Let's look at SPX really quick.
Banks are sliding. Right now, the Dow is down 206, drop there of 0.5%. NASDAQ higher by 71.
I'm going to switch over here for a minute on SPX.
10-year, 4.40%, with a 2-year yielding 4.83%. Spot gold, now little changed, up less than 0.1%, 23.12 the ounce, while West
Do you want to
Texas
stay up to
Intermediate
date with the
crude
latest
is
and
up
be on the
0.4%,
bleeding edge of news for non-farm
78.01
payrolls?
a barrel.
Then sign up
Among
today
some
and
of
get
those
our
bank
special
names that
offer
are
of Financial
declining
Juice
today,
Pro
JP
for a
Morgan
year's
Chase
worth
down
of our service
2.6%,
for the price of
Citigroup
1
off
month.
session
and
lows,
save
but still down
92%.
3.5%. Wells Fargo down 0.9%. And after the bell, add this to the mix. Hear from a major tech company. Oracle will report fiscal fourth quarter results after the close of trading.
Looking for a tag of 5360.09.
Recapping stocks are mixed. S&P right now down 2.
And then a roll back down. So watch out. We're either getting the roll right now or we're going to get a tag and roll.
Appreciate it, Charlie. That is our setup on this.
Either tag and roll or we're going straight down and then you catch one more bounce.
The prospect of higher for longer interest rates through this year are looking toward tomorrow's Fed meeting for really clues on how to game it out 2025 and beyond. That's kind of where we're looking at this point. To be fair, though, we have to get through tomorrow's FOMC meeting.
So this is SPX. I want to see this right here.
Another inflation print at that 8:30 a.m. Wall Street time.
I want to see a tag right here. Watch that line right there.
Honestly, it sounds like the best day ever for us here at Bloomberg News.
You're just saying that because
It's like, what's great.
It
You
is.
got the Fed, you got CPI. What more in life is there to ask for, Carol?
It'll create a new narrative, no doubt about it.
That white line right there.
Just reinforce the existing one. Let's get to it with Bloomberg News economics Molly Smith. She's here in studio along with Bloomberg News economics reporter Steve Matthews. He's out there in our Atlanta bureau. Molly, I want to start with you. First up, 8:30 a.m. tomorrow, CPI report. What's expected? How might that shape thinking by the Fed and traders and economists about the U.S. inflation print?
Yeah, it's going to be a real Super Bowl of a day for everybody here on both sides of the building. So it's going to be really busy. So yeah, starting off with CPI at 8:30 in the morning. I mean, I think you're probably going to call this maybe moving sideways at best is still probably the story of inflation, or gradually, modestly slowing. So it's real, this is still nowhere near the disinflation that we saw at the end of last year that really was starting to fuel the rate cut narrative. And now it's really just more like treading kind of laterally and not so much those bigger, step downs that we had seen toward the end of the year. But, gas prices.
I mean, there ain't shit up there.
So that'll be helpful. It really just depends, though, how much broader beyond that.
53.75. Woof.
Officials have been looking for that it's not just coming from energy and from goods categories. We need to see services moderate as well.
That's a good point. We are a service-led economy. Let's remind
That's
everybody.
Right. Housing especially.
Having said that, a higher print, a lower print, will it just be
One more penny, please.
disregarded? Because what we keep talking about is we need to see at least 3 reports to show an existed, kind of a really strong trend here when it comes to inflation.
Right. Yeah. And that's exactly the thing. When you
Give me one more penny.
January through March,
baby,
came in above forecast. That really
Watch out for a reversal here for a back test to go higher.
back to zero. We need to
Next target to the upside is 53.6266.
And we did
53.6379.
Underlying inflation there. That's the core measure that excludes food and energy. That stepped down month over month for the first time in 6 months. That was a huge deal.
Next target's right here. Boop.
Repeated. Also a huge deal.
Okay.
So, but
If it can be repeated.
That would be
And then the next target above is this next band right up here.
And sort of give us an idea of how tomorrow's CPI report or Friday's strong jobs report and the overall flow of economic data is going to be taken into account when we do get that policy decision, and perhaps, I think more importantly for a lot of our viewers and listeners, the updated summary of economic projections.
These meetings of the Fed have been...
R1 is right here.
Hey, can't say that.
There's R1.
Hey, if Steve says it, it's
hey,
true.
Steve, you can say whatever you want.
You can.
But this is going to be a cliffhanger. This is going to have some fireworks because, you know, the economists that we survey are evenly split on whether the Fed's dot plot is going to show 2 rate cuts for this year or 1 cut. I mean, in March, they had 3 cuts that were priced in. We had bad inflation numbers in the first 3 months, as Molly said. April showed an improvement. And what we get tomorrow in the CPI could well set the...
I don't know if we can get all the way up here, but we'll draw it in.
Perhaps stay at 2 cuts for the year.
A little bit lower.
If you have 2 cuts for the year, that implies that the first cut could happen in September, arguably before that. So if you get 1 cut priced in the dots, that would suggest you're not going to get anything until after the election. So it's all important. And Jay Powell was asked about this at a recent press conference about, okay, if you get data in the middle of the meeting, do you really change the dots?
Right.
And his answer was yes, we do change the dots. We encourage the FOMC members to change their dots in the middle of the meeting based on the latest data up until mid-morning of the second meeting. So they can change their dots tomorrow.
Well, wait a minute. And Tim's just like saying to me, wait, even if it's CPI?
Yeah, I mean, we're not talking about.
Did you guys get out on that or no?
Talking about the Fed's preferred inflation measures.
There are inflation
Steve,
prints,
come on.
and then there are.
That's fucking almost exact, right? This was actually lower. We did it right here.
But it gives a good indication.
Almost fucking perfect.
Combine the CPI and the PPI together of what PC is going to end up at.
It's really.
I'm gonna take a quick piss. I gotta go bathroom.
Okay,
It was a good day.
Fed pull out like a giant whiteboard thing. Okay, guys, we have to erase this because the CPI.
If you're looking to go higher, this is what you're looking for here.
Very dramatic. They're gonna.
I don't know if we go that high, but
away from consensus if it is.
here it is up here.
Then expect.
53.6009 was the target.
And they can change the way the median turns out.
Okay. I guess that's really interesting to hear.
Sellers are all back in here.
You know, they wouldn't take into account data that came day of. But look, if it...
You got all these fucking guys up here.
Like Steve said, that could be...
So we got to deal with this bullshit group of people right here.
Cliffhanger element that Steve was telling us.
Oh, jeez.
Woof. Of our seats in the morning. I'm sure, you know, God only knows what's
Gnarly.
in Washington at that time. Yeah, and of course they're going to be looking for that.
Came in dropping bombs on that one.
Housing number, that's always a big one that they like to look at. So this is like the underlying services inflation in the economy that, you know, taking out housing inflation because that has.
Watch out here. Be careful.
To just get a sense of what.
Just watching this action right here. You see how they're like selling that, selling that.
That momentum headed.
They're trying it again.
Another one that they're going to be looking at.
Be careful here.
Molly has
We need to hold the 1 minute trigger here, okay?
the Fed is very focused.
So see this 1 minute trigger right here? We got to hold it. If we don't hold this and catch a new high,
What's happening with service?
if we don't, if this doesn't hold and make a new high right here,
extent that you've
they're gonna try to blood this fucker right down to the depths of hell. So be very careful here.
just a little bit, then if you see that,
Very careful. This is their place to sell.
be really encouraging to the Fed.
Well, here's the thing, Steve, because I know
See it down below. They've 1, 2, trying it again.
I find it hard when we're covering the jobs report and we've got
Be very careful here.
survey, you know, with the survey of businesses, the establishment survey, sorry, saying one thing with
If you want to know if we've escaped this and get the squeeze,
survey painting
you'd want to see the 1 minute recover.
in your
Catch a new high right here, come right back down,
like what would you say
and you're off and running.
right now?
Right there, you take the trade right there. But you want to see that first,
Well, I
because they're right here. These are real sellers right here.
Chair
They're not joking here.
is how does he view the labor market? Because it's like if you look at the job openings figures,
We'll see if they're gonna win though.
you know, the number of people quitting and the job openings per unemployed, all those seem to have returned to pre-COVID levels. So there are definitely some signs of moderation.
Be very careful. These are real sellers. This is the sell crowd right here.
Market, because if he sees the labor market as basically
Real sellers right here.
balance,
Old Jim Bros.
that they would be much more open to
OGB.
cutting rate.
All right, guys, sit tight. We got another great voice.
That is OGB right there.
Back with us is Steve Skanke, Chief Economic Advisor at the wealth management firm Keel Point, former U.S. Treasury and White House National Security Council staff member. Steve Skanke joining us from Washington, D.C.
Nice name.
Steve, good to have you here and join our conversation.
Steve Skanke.
What you've been hearing from Molly and from
What's going on, Steve Skanke?
and what your expectations are about what we get from the Fed tomorrow. It's as I agree with Steve Matthews, a little bit of a.
This is kind of a big moment right here. These are real sellers. These guys right here are serious.
A lot of folks saying, wait, it's not about a rate move this year. Think about 2025 and beyond.
Well, that's right, Carol, and thanks for having me on. I agree. It is a cliffhanger, and there's a lot of ways that it could go. I think, though, we start with the...
Just a heads up.
Jay Powell would actually like to send a dovish tone, and the only inhibition to that...
This is Steve Skanke, by the way.
Bad surprise.
His dad loved him.
CPI. But absent that, even though they're not going to cut rates, they're going to have a new...
That's his name, Steve Skanke.
I think there's a growing concern...
Skanky Steve. I bet fucking people loved him in college.
An inconvenient slowdown in the...
You come with us just because of your name.
It was a surprise, but as you or Steve pointed out, I think, Carol, you pointed out...
Dude, did you guys know... Did you guys know that... I didn't know this. Did you guys... That's... Fuck yeah, it's a fucking badge of pride name.
And... to reconcile that with 272 after they revised down April to 160.
Did you guys know that Larry Williams? Do you guys know who Larry Williams' daughter is?
Confused in that.
Tell me really fast in the chat. Don't be googling that shit.
Quarter GDP.
In the chat, as fast as you can.
Quarter GDP estimates.
Who knows who Larry Williams' daughter is? I've talked to him.
Below 2%.
I didn't know his daughter was though.
That spells concern.
Anybody know who Larry Williams?
And the Fed.
So Steve Skanke, how are you thinking about this?
Steve Skanke.
In terms of how many rate cuts you think the Fed will actually be able to do?
Larry Williams.
This year, and it gets a little
You
complicated.
guys don't know who Larry Williams' wife is? Or daughter?
It does. We still believe
Michelle Williams.
Woo! Obviously, that could change very quickly if we had
Michelle Williams.
inflation prints.
You guys couldn't Google that too quick, could you?
The Fed's preferred measure.
The famous actress Michelle Williams is the famous trader Larry Williams' daughter.
I think that they'd like to cut.
Yes, Steve Skanke is a great username, isn't it?
And so how do they do that? And if they can't cut twice, how does
these fuckers are going to be pissed right here?
That they're
this gang, these guys right here are going to be
in their
pissed.
in their policy moves. You know,
Yeah, Michelle Williams, the famous actress.
you
know, the fucking A-list celebrity. That's Larry Williams' daughter. I had no idea.
Which would certainly disrupt financial markets.
That would be definitely.
Dude, Steve Skanke, and then use his picture too.
Oh,
but come on back in.
Bow tie.
I want to come back to Steve.
He's got a little mustache going too, a little fuzz patch going.
Fed meeting, and
What's going on, short seller?
In the chair in DC, who's asking Jay the questions. We talked about one that Powell will probably get is how are you viewing the labor market right now?
He's got a plumbing company. It's like Skanky, and Skanky.
Steve said a big question is how does he see the current economy? I mean, if you look at, for example, the Bloomberg Economic Surprise Index, the economic surprise.
Fucking pity his daughters. His daughter's like, fuck you, Dad, I'm changing my last name.
Trailing the consensus estimates fairly consistently. And, does that raise some concern that maybe...
Yeah, I like that cash and carry. I think, isn't there a bar named that? Isn't there a Wall Street bar named Cash and Carry?
How much worried
I thought there was a bar named Cash and Carry.
Be asked about the dot plot and inflation, but it's like just the view of the total economy would be really important.
I've been drawing it out all afternoon here for you. I don't know what else to say.
With a guest about
it's all right here. I've been in trades, so I don't know what else to say to you.
now is more normal.
You can follow the crayons if you like.
That is necessary, and that's a good.
If the 1 minute trigger holds, we get a new high. Jump in the trade, go higher.
Works, right? The Fed having breathing room.
You just got a new high just then, I think.
Yeah.
By a fucking
Powell or other Fed officials.
Yeah, you barely right there. Well, you got it's close enough.
About monetary policy benchmarks.
And these are your real sellers right here, too. They're about to get squoze in a pretty big way. So if you look down below here, right,
which is around,
this is the,
there is room to bring
this right here. Sorry, I was drawing that out to sell.
If they become convinced that.
So just so you can see it right here, SPX Gamma, right? It's fairly easy to see.
Then is the conversation of
Sellers coming down right here.
completely
Sellers coming down right here.
Matthews is telling?
And they just made an attempt to do it again, right? See it?
Powell probably has some concern about that.
They're being overrun right now. What does that lead to? A big old squeeze. Well, it's going to bounce there, down, then up. It'll be like that and like that. And you'll retest that high right there.
Concern is that they need to encourage economic activity for the reasons that we've talked
Something like
and so I would believe that there's a good chance, absent
that right there.
that the forward guidance is
Does that help you?
is going to be toward easing, even though they won't change interest rates.
The question becomes, do we go even higher?
Hey, Steve Skanke.
Do we go to the call wall at 5,400?
But just in 30 seconds, what's at stake here if you
If we did, you'd be
if that doesn't happen, how would you change how you advise the folks at Keel Point?
probably blasting down.
The economy is
And then a straight shot right there.
okay, but the downward revision that we've had in GDP growth and
But I don't think we're getting there.
signals in the labor market certainly generate concern. Now, earnings growth continues to be remarkably positive, and so on that front, we're certainly positive. But we're very cautious if the Fed continues to hold.
And this is not the new high. This is just that little brick right here. That's this little brick right here.
That'll work poorly for the economy and ultimately financial markets.
All right, our rapid round as we get ready to wrap up. And
Watch out, because they're going to roll this down on you. The squeeze is going to get rolled down, just a heads up.
And you do need to be quick.
This will squeeze, but it'll roll hard and fast.
Bump up and the dot plot to show a heavier orientation toward raising rates.
Wow, that would be crazy. Steve Matthews, real quick.
I'd say the dot plot showing just 0 or 1 cut, and also for long-term rates to in the dot plot to move up in the neutral, so-called neutral rate.
That would be our new narrative. Molly Smith saving the last 30 for you.
Maybe if Powell were to say that the labor market is still very tight, I think that would be it would be questionable of how he would fully support that. I think there are a lot of other data points that would maybe suggest otherwise.
Which is interesting, right? Considering the mixed signals in the labor market. If he comes out and says that they're tighter.
Them all.
You guys,
I'm with these guys 100% right now. Like the Fed is in a real fucking tight spot right now.
Porter follows the Fed for us. And Steve Skanke.
The data, if like you got Nick Timmeros out there and he's saying to people, oh, it's only you that's worried about what happens. The Fed wants to take the summer off. They're going to come back in the fall and winter and look at the data. That's complete fucking horse shit.
That's stock.
That's setting up some bad shit down the road. Really bad shit. Unless that's the intent. I didn't think that was part of their mandate. The data is showing that the Fed has done their job in most metrics. The economy is deteriorating. But on the other side, you might be saying, yeah, well, the labor market's hot right now, Cap. It really isn't if you look over time from back down into the 1940s. We're at a literal bottom of workforce participation rates. No, I'm not going to let you. I'm not going to tell you that they're just working 3 jobs. They're doing just fine, Cap. That's not true. Not true. The labor market right now is very precarious and could plunge us any velocity in unemployment. This market will fucking burn. I guarantee it. Fuck the rate cuts. They'll be chasing rate cuts. So my posit here into tomorrow for the Fed is that you're going to get Fed speak
to see what's moving,
addressing that you don't want a recession just yet, and that you probably want to run the economy hot.
This is Bloomberg Daybreak Europe. You're watching the China Show.
Some kind of addressing this around, or some kind of an addressment around this heading into this meeting, so that they're prepping you for a possible rate cut in the fall or winter. This is the most likely chance that if you were going to get a surprise cut, that it would come tomorrow. Now, if you're like, hey, I'm in surprise cut camp, this is your best chance of a surprise cut is tomorrow, believe it or not. Will you get a surprise cut tomorrow? I'm going to leave that at about a 25% chance. It's a little higher than it was earlier. I was giving it like 15 or 20, but after all this data's come out, I'm going to raise it a little bit to about a 25 to 30% chance that you get a surprise cut tomorrow. I don't think it's going to happen, but if I'm going to tell you what, if you don't get the cut, if you don't get the speak that I'm telling you about, those reporters are going to fucking lay into Jerome. And not only are they going to lay into Jerome, it could be perceived by the market as real danger.
Ask a question or visit SearchGo.
To the market and the economy waiting until fall and winter. And you will likely see a ramp in a discussion that the Fed is over tight. That will become boom, #1 headline if that doesn't get addressed tomorrow or if reporters don't get answers.
In global affairs, but geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news.
I think the highest reward is IWM fucking mooning.
Around China. Bloomberg.
The market would also moon initially.
Hong Kong time, right here.
You'd probably hit that 5,500, 5,600, and this shit's going to roll down on your ass. Oh, dude, I meant to look at Palantir today.
It's 2:21 on Wall Street. We do check markets.
I didn't get a chance. I've been wanting to look at it for a fucking day and a half, 2 days. I've had no time to look at it.
The S&P 500 index up 5 right now, higher by 0.1%. We've also got Apple very close to session highs. Look at it.
Oh, yeah, baby.
Turnaround from yesterday.
Just pumping.
By about 6.2%. Yes, more on the
trading 24.
Just a moment. A slide in bank.
Coming into
ahead of the Fed decision tomorrow. S&P, as I mentioned, trading at a record.
Coming to R4, R5 at 24.45 and 24.13.
Also
it's getting a little longish in the toothish.
That is a gain for NASDAQ at a record up 0.6%. The Dow, dramatically different story. The Dow down 150 now, down 0.4%. 10-year.
Watch out for a pullback and maybe one more high to 24.42.
Spot gold up 3.
Palantir.
23.14, up 0.2%. While West Texas Intermediate crude oil higher now by 0.4%, 78.06 a barrel. Apple shares hitting their first intraday record since December to date, as investor sentiment around the iPhone maker continues to improve. Again, worth repeating, Apple right now up 6.2%. Recapping, stocks are mixed, but the S&P pushes higher, up 4, a gain of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, it's not a fruit, but it is a very well-known company.
All right, I'm going to take a quick piss. I'll be right back with you guys. I'll leave the show on for you. You've got the targets. You hit your high target just then. Watch out for a pullback to the downside. To squeeze to the upside to 536.87.
Sinking overnight as well, following their big event that got underway yesterday. But as we said, very different tone. Apple shares at a record after that great AI reveal. We want to get to it, though, once again, and lucky for us to have back with us our own Bloomberg News chief technology correspondent, Mark Gurman, who continues to write about everything that we are getting from the event on Apple and just Apple in general. Mark out there in LA. So, Mark, what happened? Apple shares traded lower yesterday. We talked to you, rallying big time today. When we talked, kind of following the keynote, you said your view was that we kind of saw nothing better than or different from the competition, except marketing and a focus on privacy. And I love something you said was that they showed up to a party without a gift. It was like something we thought just said so much. So what's happened in the last 24 hours?
Well, like I said, they rolled out a bunch of new AI features with a privacy stance, with deep integration into their applications. They didn't bring anything new to the party, but they did it in an Apple way. But the most important part is they showed up to the party, I guess. And it took investors in Wall Street some time to realize that Apple is now here. With or without something new, they've arrived. The concern on Wall Street was that Apple would never show up, or they wouldn't show up for a couple more years from now. But they worked as fast as they can. It was a 1.5 year Herculean effort to get Apple Intelligence to market. They had all these AI features under development, but no synthesized, no integrated package. So it took a while to put it all together.
Okay.
And they did that. And it's not going to sell new iPhones, I believe. It may spur a small number of upgrades, but more importantly, it's going to lock people into the ecosystem. They're going to keep their existing user base, and they're not going to lose people away to Android and other AI-driven platforms because they did this. So it was critically important for them to do it, regardless of the fact that nothing they brought to the table here is especially new.
Mark, why don't you think this is sort of a huge prompt for a supercycle upgrade here? Why don't you think it's as big as adding 5G to the phone, for example?
You know, quite frankly, I didn't think 5G was a super cycle moment either. And it turned out that way. I mean, iPhone sales growth has been stagnant even prior to the 5G iPhone. But like with AI, what 5G did is it kept people within the ecosystem, and it didn't allow people to switch away to rival products that had 5G while Apple didn't. And so AI is in the same nature. It's going to keep people within the ecosystem. I don't think if someone has an iPhone 14 Pro today that they're going to upgrade to the iPhone 16 just because of those AI features, right? I think that down the line, a year or two from now, when they're ready to upgrade, that's going to ensure that upgrade happens.
I'm going to say that my household, we're a bunch of tech simpletons because I think the 5G, we do the upgrades on the Apple phones.
Are you still back there? Is that where you are?
I'm at a 12 and I'm getting ready to upgrade this come fall.
I think that makes sense that you'd upgrade from a 12 to a 16.
Tis time. The formal announcement with OpenAI.
Let me jump in. Let me jump in here.
Sure.
If Carol was, really focused on artificial intelligence and wanting the latest and greatest technology, and she has a 12, the 16 comes out later this year with no AI features, right? Maybe she takes a look around and says, AI is all the hype right now. That's the vibe right now. Maybe I should take a look at Samsung or Android, which are completely AI-ified. Now the iPhone has AI, just like the competition, right? Not a ton different, but they're there. And now she says, you know what? Of course I'm going to get this new iPhone. So I don't think it's going to spur upgrades and get people to run out to buy them, but it's going to ensure those people who are already thinking about getting that phone pick that iPhone instead of moving away to Google or Samsung.
And I will say, Mark, and I think we've talked about this before, and we're a household where it is all Apple. And, my daughter, when she was younger and tried to deviate, we're like, no, that's not happening. So it's like we kind of continue to embrace. I do want to ask you, though, about the partnership with OpenAI, right? The formal announcement, we got that. How important is that? And is it any different from OpenAI's other partnerships that are out there? And is it always different because it's just Apple doing it?
Oh, the OpenAI partnership with Apple is incredibly different. So let me give you some perspective here. So Microsoft, they rolled out a ton of AI features on their computers and their other operating systems for both their in-house devices and third-party devices. The underlying large language models and underlying technology that they're using for nearly all of their features is powered by OpenAI. Apple's feature set, 90% of it is powered by Apple large language models, underlying Apple technology, Apple servers, etc. Only the chatbot portion, primarily, and some of the writing assistance tools, those are powered by OpenAI large language models and ChatGPT. So the OpenAI portion of the overall Apple intelligence story is actually only a very small sliver.
Is it integrated at the OS level? And you can probably guess why I'm asking this, Mark, because
I can guess why you're asking. Let me say a few things about that.
Okay, good. Because, I want to introduce it because I don't think everybody is totally caught up on this. Yesterday, Elon Musk said he would ban Apple devices from his companies if OpenAI's AI software is integrated at the operating system level. He called the tie-up a security risk. Okay, go ahead, please.
Something integrated at the OS level, that is a vague term that can be interpreted in many different ways. So it's not entirely clear what he means by that. If you ask me, OpenAI is indeed integrated at the OS level. And I'm sure Apple would agree, but I'm sure there's some other people who would say that it's not integrated at the OS level. It's built into Siri. It's built into the OS. It's a chatbot. It's not just an application. It's not just a layer on top. It is fairly integrated into the operating system. So I would say, yes, it is integrated. But just because it's integrated at the OS level doesn't mean there aren't parameters and what's known as sandboxing implemented into the coding infrastructure that can separate what goes into ChatGPT from the deeper core of the iOS foundation, right? And so it's up. The burden of proof is on Apple and OpenAI to show how privacy-centric the ChatGPT elements are of Apple Intelligence. Apple did a 15 out of 10 job yesterday showing how private and secure their artificial intelligence technology is for the phone, that's the Apple LLM, how secure their compute cloud is for the LLM that runs in iCloud. They did an amazing job on that. What we didn't hear a lot about is the privacy protections that OpenAI are implementing. From some standpoints, you can say it's just, you know what, trust us. Maybe Apple could say a little bit more there. Either way, I think that Elon Musk is competing with Apple and OpenAI here. He has Grok from XAI. He has a terrible interpretation of Apple and feeling towards Apple and their App Store rules and the fees they take from subscriptions on their platform. He clearly does not like Sam
According to a
Altman,
joint statement,
right?
Hamas and
He's embroiled in
Palestinian
all sorts of
Islamic
things
Jihad
regarding Sam
expressed
Altman and
readiness to
OpenAI.
positively reach a deal to end the war on Gaza. And NYMEX diesel July futures settle at $2.42 a gallon. NYMEX gasoline July futures settle at $2.40 a gallon. NYMEX natural gas July futures settle at $3.12.
Is it that, you know, he could ban these devices?
NYMEX WTI crude July futures settle at $77.90 a barrel. That's up 16 cents or 0.21%.
Into work at SpaceX or the Boring Company or Tesla.
It's a top 10 most ridiculous Elon Musk tweet, right?
Okay.
That's not going to happen. I mean, imagine like showing up to work and like all of a sudden, you know, you can't bring your Apple devices in. You have to leave your iPhone in a Faraday cage outside the office or leave it in your car. That's just not going to happen, right? He's already laid off thousands of people from his company, or tens of thousands of people
Protect
from
your
his company.
trades from
I'm not
macro
sure he can
headline
afford to
risk
have
with
people
Financial
quitting
Juice Pro.
in large numbers at this
Now
point.
only $99
I
a year
think that's
for
gonna
our
upset a lot
real-time
of people.
service.
All right, you know, we always talk about the importance of the Chinese market to Apple. Is there something here in terms of what we're hearing from this event and, you know, what they're doing in terms of AI that kind of moves the needle potentially in their sales over in China?
Yes, good question. This is a point that, quite frankly, I should have made earlier. Nothing. Apple Intelligence, at least the first iteration, is only available in U.S. English. Yes, in U.S. English. So there's going to be a long ramp up here until they're able to get it in other languages. Now, let me give you some Apple history. When Siri launched in 2011, it only launched in English and a couple other languages. But 1 year after Siri initially launched, they released so many additional languages. In Siri today, it works in every, you know, Chinese dialect. It works in
Woo! Moonin', baby.
Barrier.
Spoo's now trading 536.63 on its way up higher.
And
into R1 at 526.91 right now.
Just U.S. English is going to be a very high priority for next year. And so I would anticipate China next year. Now, one other piece of evidence about how Apple sees China, it's going to be one of the first markets to get the Vision Pro this month, just a few months after it came to the U.S.
Right.
So clearly they're thinking, you know, U.S. first, right?
Yeah.
China second. And it's not like China's like down the list. Right, it's a priority. So I would imagine the AI story for China is going to get buttoned up sooner than later.
Everything we need to know about Apple. Mark Gurman, you rock. Bloomberg News Chief Technology Correspondent Mark Gurman out there in LA. That is our top stock story. The shares of Apple are rallying. We're going to get to our top political story in just a moment.
Hey, let's get a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Hunter Biden has been found guilty in his federal firearms trial. The son of President Biden was convicted of 3 counts of violating federal gun laws for illegally checking a box on a form stating he was not an active drug user at the time he bought the firearm. Former Assistant U.S. Attorney and Assistant Special Watergate Prosecutor Nick Ackerman says Biden's attorney never should have allowed this case to go to trial.
They had to have known
right from the get-go that there were these text messages during the period of time when he signed that form and filled in those boxes and also possessed the gun, even though it was for a short period of time. They knew that there was evidence that Hunter Biden was still addicted and was still taking crack cocaine.
Nick Ackerman speaking with Bloomberg's Balance of Power. 2 of the gun counts carry a prison term as long as 10 years. Another is punishable by as many as 5, though judges rarely impose maximum sentences. President Biden plans to travel to Delaware today. He plans to spend some time with his son, and President Biden says he does respect the jury's verdict. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Markets move fast, and now you can too, with instant funding and fast trade execution at IG.
I wouldn't be here if I didn't start here. Make college moments a reality. Unlock thousands of dollars in scholarships and financial aid by filling out the FAFSA. Get started at mi.gov/FAFSA info.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lyons deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have 2 assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
$240 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index trading very close to session highs right now. Down day for the Dow Industrials, down 131 right now. Drop there of 0.3. Composite index up 115, now up by about 0.7%. 10-year 4.40% with a 2-year that's now yielding 4.82%. Gold up $3.50 the ounce to $23.14, up 0.1%. West Texas Intermediate crude up 0.2%, 77.91 for a barrel of WTI. Apple shares pushing higher. Apple at a record, dramatically different story than this time yesterday, up now by 6.5%. And GM shares are advancing up 1.6%. GM has authorized a new $6 billion share buyback plan as improving profitability in its primary business and growth in EVs allows the automaker to return cash to investors. Oracle after the bell, again recapping stocks higher. S&P up 9 right now, up 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are up to date on the markets. We do want to get to our top political story at this hour. Hunter Biden found guilty of gun charges by a federal court jury in Delaware, becoming the first child of a sitting U.S. president, Tim, to be convicted of crimes.
A lot of firsts when it comes to politics and legality over the last couple of weeks. With a look at the legal side of the case and the decision and what's next, with us we got Bloomberg News legal analyst and host of Bloomberg Law, 6 p.m. Wall Street time on Bloomberg Radio, June Grasso here in our studio. June, I do want to ask a little bit about the case and why it was brought by special counsel and U.S. attorney for the District of Delaware. Like, go back to the origin of this before we get to what exactly happened today.
Well, you know, this has been kicking around for years and years and years, and finally, you know, Weiss was appointed, and he started looking into it and brought charges, and there was going to be a plea agreement, which everyone seems to think that this is the kind of case that if you're going to bring it, a plea deal is appropriate here. Right. And there was a plea agreement for this and for the California for the charges of tax evasion. So that was all set. And then they went, you remember, I think I came on that day, they went into Delaware court and said, we're ready. Here's our deal. And the judge said, not so fast. She found certain incongruities and problems with the deal, and it just blew up in their face. Then Weiss asked to be appointed special counsel. And, you know, what extra duties, what extra power do you have? You can bring a case outside of Delaware, because he was in Delaware at that point. He's bringing the case in California, and you can write a report afterwards. So now you have the special counsel, and they brought everything to bear in this case against Hunter Biden. They didn't leave any stone unturned when describing his descent into addiction. You know, they played his they played part of his memoirs.
To be fair, did he break the law?
Well, the jury says yes. The jury says yes. The jury had to believe, and some of the, you know, some of the jurors have spoken to CNN, that when he filled out that form, one of the jurors said it definitely, he was on drugs at the time. They thought he knew it.
Well, that's what I wanted to ask. Does accountability mean something different when addiction is also present?
Well, see, that was sort of I think the only hope for the defense here was they were hanging on the fact that 4 of the jurors at least admitted that during jury selection that they had relatives or close friends who had been addicted. And so I think that the defense was saying, look, he was addicted, he didn't knowingly do anything wrong here, but so they were looking for jury nullification. They were looking for a juror to say, one or two to say, well, we feel bad about him. He shouldn't be sent to prison, which, by the way, one of the jurors said afterwards he shouldn't be sent to prison.
Well, that raises a good question. What is likely for sentencing for a first-time offender here?
So the outer limit is 25 years, which he won't get. So it's possible that he could get no jail time at all, get probation, because he's a first-time offender. He has no history of this, and also there was nothing done in connection with this gun. The gun was put in a box and then, thrown out
away.
And whatever.
Yeah.
So it could be that, or he could get some kind of minimal prison sentence. I listened to one judge I talked to said that maybe a minimal 1 year prison sentence or so might be in order. So, it's a lot of calculations go into what a judge decides.
Is an appeal part of that calculations, though, on the defense side?
Well, because he didn't plea, he can take an appeal, and I think that he has some really good issues on appeal. One is a constitutional issue about guns and drug addicts, because the Fifth Circuit has thrown out a law that says that drug addicts can't possess guns. And that's sort of percolating through the system. All these kinds of cases involving guns, since the Supreme Court came down with that landmark decision in New York 2 years ago.
Right.
The courts are all in different spots with that. So that might be a constitutional issue where you have groups like the NRA on Hunter Biden's side.
I do want to say we are seeing that President Joe Biden is speaking right now at an Everytown for Gun Safety Gun Sense University conference at the Washington Hilton. We're monitoring that to see if he has any comments about this. I do want to also note that Michael Bloomberg, founder and majority owner of Bloomberg News parent Bloomberg LP, did help found and is a current supporter of Everytown for Gun Safety, which does advocate for gun safety measures.
Our thanks to June Grosso. She's Bloomberg News legal analyst, host of Bloomberg Law. Catch it at 6 p.m. Wall Street time on Bloomberg Radio. All right, so that's what is the legal side of this decision. We want to also get into what it means politically for Hunter's dad. We're talking about President Joe Biden and the November presidential race.
Yeah, with that side of the story, we go down to our Washington, D.C. bureau, where Bloomberg News national politics reporter Hadriana Lowenkron joins us. Certainly living in unusual times, Hadriana, with former President Trump recently being found guilty in the first criminal trial of a former U.S. president in the history of our country, a verdict that could reshape the political landscape. Now, for the first time, a child of a sitting U.S. president to be convicted of crimes. What are the political ramifications of this conviction against Hunter Biden for his father, the current president running for re-election come November?
Right. So, of course, just a slew of unprecedented events taking place in our political landscape here. It's interesting. What's important to note is that this was a trial that really opened, a lot of trauma. It was, and sometimes maybe embarrassing, but it was very personal for Hunter Biden and the president, as well as, the entire family. And so there is kind of a question of how does the president address this. He has said in the past that he would not pardon his son if he were to be convicted. He has said that he would respect the verdict, and that has stood true today until at this point where we are right now. But he can, have surrogates who can really frame this as comparing this with the former president, who, again, as you mentioned, is a convicted felon. He can still kind of make that case if he has his surrogates point to that. He's already, framed the former president as, and the race as one, against democracy. And so it'll be interesting to see how he continues to play that and find that balance.
What do you think, or what are you hearing, if anything, from Republican and Democratic
Brent
political
crude futures
strategists,
settle at $81.92 a barrel. That's up 29 cents, or 0.36%.
Heading into November.
Right. So, what's
front month NYMEX natural gas settles at $3.12 per million British thermal units, the highest since January 12th.
Suggested that, for the most part, if you're with Trump, you're going to be with Trump. Even after his conviction, he's raised a lot of money off of that, continuing to rally his base. And then Biden, of course, is able to use that conviction to further say, this is a person who is everything that stands, against what democracy is. But, you know, something like this could, you know, continue to, again, rally Biden supporters around him, rally Trump supporters around him. And, you know, we'll see if there's maybe a bit of a movement from some voters who haven't been decided, but strategists really aren't foreseeing that to be too many voters that we're talking about here.
We are definitely living in interesting times, to say the least. And June Grosso just kind of sharing with our team, who we were just talking to, that 3 of the jurors didn't think that the case should have actually been brought. So it's kind of interesting, some of the behind-the-scenes stuff.
We'll see what happens on appeal. I do also want to note, Hadriana mentioned the statement from President Joe Biden, who said, quote, "I will accept the outcome of this case and will continue to respect the judicial process."
All right, just really quick here. Just want to show you guys as we approach this upside move here. All right. SPX down below. You can see here that you've got this little bit of a dip right here. It looks like they're coming in a little bit early. Let me go down here and show it to you. So just right in here, you see these sellers. So this is how it went down here. Make this big, maybe. Get rid of all that right there. Somewhere right in here. This is SPX Gamma. Get all that stuff right now. Remember earlier when we said, these guys are going to try to come in and sell, right? So this is where they came in before. Sold it down. Came in before. God damn it. Came back in, bloodbathed it. They came in again right here, and they failed, right? We went up just a little bit, didn't we? The moment that happened, we were off and running to the upside. Now, what you're looking at here is 2 things. You've got SPX Gamma Bar at 53.75. So they're going to come in and try to sell you down right here, right? You see this Gamma Bar right here, right? It's right here. And they're going to come back in and try to sell it to you down right now. Now, this Gamma Bar is not that strong. It's only 38 million. We're right around there right now. Could we squeeze up one more time and touch this? Sure. We just want to hold this 1/2 an hour bar down here. So let's take a look at that on SPY. The reason I'm saying that is, can we trade this next leg higher? To 5,400. I doubt it today that'll happen today. But can we at least get a new high? Maybe it'd be kind of nice, right? Maybe it pulls back a little bit, right? And then straight up there. Or are they going to roll it straight down on us? So what we're going to be looking at here is this last known place on this last 1/2 an hour bar. So we're going to go over to the trigger screen here. And we're going to look at a 30-minute basis. And where it's a battle right in here right now. We're right on a battle right where we are. Right where price is right now. So this one right here. We want to hold this zone right here to go higher, okay? And it's probably higher than this. It's probably more. I mean, I guess they could push it down, but you really want it to be up here. You really want to be holding this. You don't want to be giving any of this up right here. You could possibly extend it from right there, maybe. Hold on. Come on now. I guess we'll bring it back up. There's that push right there. 1, 2 low series of lower highs. So right here is that big thrust. Consolidation right here. So this needs to hold like right now. If it doesn't hold, they'll roll us back down again. to support back down here at this hourly trigger down here. So just be careful of it because they can, if they begin to reject this, they'll send us back down to at least here. If not, the entire move will come right back all the way down here. We got fairly close, 536.63. And do I think we can get up? I'd like to see us get up here today. I'd like to see the tick, even if it fails, that just so we have the tick so that tomorrow, if the report is good, it opens the door to 5,400 on SPX Gamma Wall. I don't ever like seeing the failure. I always want to see, like, even if it's just a little tick. It's the tiniest little tick for the algorithms. We get a good report tomorrow. We slam it at 5,400 by end of day tomorrow. Pay close attention to this top here. Does it get above, or does it get auto rejected or not? On a 30-minute basis, it's bullish for us to continue to go higher. So I do think we go up there and tag it up there. It's 2:55. Do we get power hour or not? I'll do you one better. Tag that right there, or at worst case scenario, pull back and then up there. I'd really like to see just the tick. Just the tick, just the tip. I don't care if it's here. I don't care if it's over there. I'd really like to see it. I don't want to see the bloodbath for CPI tomorrow. I always like seeing that strength. Whenever you're coming into resistance or support, let's draw this outside here. This doesn't really matter if price is coming down. I always want to see, like, does it bounce before we get there? Does it break through in V shape? Does it break through and reject with a new low? You're always looking for the interplay with support or resistance. Is it something where we come down and it just starts to do this shit, then it moves higher slowly, right? You want to see what that, like, is this a real support level? Is it fake, right? How weak is it? So where we are right now, heading into this close, so far it's been rejected, but it didn't auto-reject in bloodbath. That's good for bulls. There's some consolidation going on over here. I don't like it. We haven't done a 5-minute check back once, so I guess that's possible that we would get the, just quick liquidation break, then straight back up, and then boom up here. I'd like to see that. That's bullish. Now, I don't care if we hold this either. If we get the tick above, as long as we get the tick above, the algos are telling me we're still going to catch the new high in the market. We'll catch that 5,400. If we don't, it puts it into question. So just keep paying attention to it. Use this more as a gauge to what to expect in tomorrow's price action. I'm always looking for like prior low. Did we tick below it? Prior low, did we fail to tick below it? This can indicate more lows to come. This is likely bottom. Unless we get some kind of a V-shaped recovery. Take close attention to this. I think we go up there into the close, by the way. So And I would be selling this into the bell. I'm already out. I was out way down there. I haven't gotten back in, but I was out way back there. I made my money. I made 100% trades. I'm happy. Right down in there, be paying attention to this, up into this bell right here. I'm going to get rid of this one right here, just so we can draw in where the sellers are. They're right here. Buyers, sellers. So you can see it better. Now we're ping-ponging, right? Whoop. Right down there, whip, down there. Whip, down there, whip, down there, whip, up there. Pay very close attention. Matter of fact, I'm going to draw in the actual prior high. It was here with the yellow box. Now it's no longer here. Just underneath. Just underneath. Just underneath that R1. See that little right there. You just want to see it get above. You want to get above 536.90. It's all, if you're a bull, that's all you want. Forget 5,400 for right now. You just want the tick. Just want the fucking tick. That's it. Pullback will get bought. We'll trade 5,400. It's all you're paying attention to here. What about bear cap? I'm bearish, but for a dip buy, Stonks Anonymous. I'm not bearish on the market. I'm just bearish on a dip buy. Bear cap is trying to buy a dip. I want cheap dip buys. I'm still looking for one tomorrow, Stonks Anonymous. You need SPY to crash to 526. You know, Stocks Anonymous, you can take both sides of the trade too, right? You don't have to be one-sided trading. The whole system is based upon buying the market and then shorting whenever we roll under the 1 5 minute, right? So you can be both at the same time. Stonks Anonymous, do you get the briefs every night or no?
According to an official briefed on the talks, Hamas's response to a proposal includes new timeline for permanent ceasefire and withdrawal of Israeli troops from Gaza, including Rafah.
You used to, but for some reason you don't now? Can you send me a DM so I can check your membership? Can you shoot me a DM, Stonks Anonymous, on Twitter? Thanks, I appreciate it.
for tomorrow with CPI and FOMC data coming out. I think, first of all, with the FOMC, we're going to be watching two things: the dot plot and any information that they give us on the direction of inflation. For the dot plot, I think we may see that shift down a little bit to 2 cuts or maybe even less. And also when it comes to inflation, they may be talking a little bit more about inflation remaining sticky and above the Fed's target, because switching over to CPI, that number as well as PCE are still well above the Fed's target, running at about 3% on a core basis year over year. And we're going to be watching auto insurance, which drove CPI higher last month, as well as apparel prices, which drove CPI higher. Those are the two areas where we'll be waiting to see, will they cool off a little bit? But as of right now, the Fed's hands are tied. They cannot move to aggressive rate cuts because inflation is so far above their target.
Are investors' hands tied right now, Sarah, when you take a look at that?
You know, I think investors are willing to accept this move down in the number of rate cuts as long as the economy remains strong and we see that inflation is not reaccelerating like it was earlier this year. So I'm probably going to be a little bit more focused on that first CPI number we get. Do we see signs of inflation reaccelerating because of, for example, payrolls that were so strong last week and wage inflation that has been strong? If that points to an acceleration in inflation, I think markets will become concerned. So CPI at 0.3% or under that, I think will be okay for the markets. We move much higher than that, I think the markets get nervous.
And that's why I said 17 and a half hours, some crucial hours for those risk assets. Sarah, the play out today, even though you have the S&P and the NASDAQ at record highs, is still kind of the play, right? Apple doing really well, banks not doing really well. Within the tech space, what is your top buy right now?
Yeah, so first, yields down, banks down. That's not surprising. And today is the day of Apple, and Apple actually is something that we've been positive on for a few reasons. Number one, we had the developers conference yesterday. The anticipation over AI going into the iPhone is exciting. We are reaching year 5 in about a year from now, which is a typical iPhone replacement cycle where people will be wanting to upgrade their iPhone. So we have that cycle in front of us, and seasonality for Apple is strong. Seasonality starting in May, going through September, when we usually get that next iPhone, is usually positive for the stock. And finally, people are underweight Apple because they've been so focused on stocks like NVIDIA and Microsoft. So with PMs underweight, I think you could see that pain trade where people have to cover that underweight given the performance we've already seen out of Apple.
I like that you brought up NVIDIA because I wondered if it's sort of like buy Apple, not NVIDIA right now. It feels like that's the trade, at least today. In that AI space, if you want that direct exposure, what's the top way for you?
I mean, it is NVIDIA. There's just limited supply for pure AI players. NVIDIA wins in any segment of AI because it's the supplier of everything. And if you look at NVIDIA, it's interesting because for a semiconductor stock, it's not expensive. It's trading at a discount to the semiconductor industry. So that pushes back on the bears' arguments of people who say that NVIDIA stock has rallied so much that how can you buy it here? It's actually not an expensive stock. It's actually somewhat cheap. And so, it's not sell Apple to buy NVIDIA. I think you actually want to own both and maybe sell other stocks in order to buy those.
When you look at sort of the backdrop of the rally that we've seen in NVIDIA and really the chip stocks overall, a 28% jump this year so far in the Philadelphia Semiconductor Index, and you look at the laggards in the tech space, which are the software companies that I thought would actually be benefiting from this AI boom, Sarah, is there any hope left for that trade, or are we just kind of abandoning that and just hoping that NVIDIA and Jensen Huang and that leather jacket rides us to the future?
Well, I think it's interesting to pick through the carnage of software. It has underperformed semiconductors by a little over 45% year to date. There are quality software companies still out there, even given the underperformance that we've seen. So one is Snowflake. This is actually somewhat of an AI play because they clean up companies' data so they can prepare for incorporating artificial intelligence into their models. They had a strong first quarter, some of the best revenue growth we've seen in 2 years. Just hired a new CEO that came from Google's ad business. So these companies, I think is where you should be looking because eventually.
Oh, that looks like Market Watch.
Because it's pretty extreme for software to underperform semis by over 45%.
Sarah, always great to talk to you. Sarah Malik there, CIO over at Nuveen, helping us kick you off to the close on a day where we see NVIDIA on the back foot, Apple having a record day. It's going to be a big theme of the show.
There's almost nobody left doing this stuff.
And CIO over at GQG Partners, a huge holder of NVIDIA shares. We're going to get his thoughts on the tech sector and some of the U.S. restrictions on.
And that sucks. I got to revisit that whole fucking thing down there.
Simon Freakley.
No one is doing any more. Nobody's doing.
Around the world, and who is
that kind of sucks, man.
A direct conversation with the C-suite. Cisco betting on Splunk to build its AI portfolio. The CEO of Cisco, Chuck Robbins, going to be joining us, as is the head of Cisco.
Old tech is finally dying.
Steele, the former head of Splunk. All that and more coming up in a bit. This is The Close on Bloomberg.
May 1st. The fuck? MarketWatch just turned off? God damn. I think CNBC turned theirs off too already. Well, I used to have a bunch of feeds for this, and they started turning them off this past year.
And finding campsites with the people you're closest to.
And shitification of the internet.
With over 1 million parts and accessories. And bring your truck to life. Real truck.
I got rid of CNBC too. I'm gonna have to go check on some feeds. It's been, I thought I had more feeds on there, but I remember I culled it recently. Kind of stinky about it. I'm checking in the background right now. It's a gangster little thing, too.
We're in the middle of seizing the date. In the middle of the perfect pairing. And parking it here for the night. So come get away. Together. Illinois, the middle of everything.
That's fucking pissing me off. That's like a sad day. That makes me angry. Not angry, just more like such a simple tech that's low impact. It's got like low impact, low compute, just like really simple shit.
Joined now by their CEO, Simon Freakley. Simon, great to get your perspective. Laundry list. It makes our problems look totally different. I mean, like a laundry list of stuff. What's top of mind? What's the thing you hear most from your CEOs?
Well, you know, CEOs thought they were getting a throne. They now found themselves on the hot seat because they've got to deal with multiple disruptions. They have elections coming up, not just in the US, but also now, of course, in France and the UK. Irrespective of the...
Hey, Chapakaji, how are you? In the background, working real quick.
Make sure during a stressful time they can communicate a steady message. On top of that, the geopolitical tensions, of course, what it means for supply chain as the Red Sea continues to be disrupted, a continuing war between Russia and Ukraine with the possibility of it spilling over. It's a very stressful time for CEOs. I sometimes joke, Alex, that our disruption index ought to be called the anxiety index because we do see that taking a strain on CEOs.
How do CEOs that maybe operate in China feel about the relationship of the U.S. and China?
Well, I think CEOs generally that I speak to every day are relieved that the toxicity of the dialogue has actually come down a couple of notches. You know, a year ago there was a poisonous dialogue going on, which made it very difficult for business leaders to see a future in China. I think as a result of several very significant business leaders, Jamie Dimon, Elon Musk, Tim Cook going over.
That's kind of fucking sad. I'm kind of upset. This is like it's like the end of an era.
Reaching out to Joe Biden means that the temperatures come down.
There weren't that many. They started cutting it like a couple of years ago. They started becoming less and less and less and less.
About the election, the November election.
Then Twitter fall was like the demise of it all.
Survey every year, 3,200 seats.
Or you know who killed it all? You know who killed it all?
In the top three.
Elon fucking Musk.
U.S. election, and not because
he killed a ton of it.
One outcome or another, but how are they going to talk to their constituents, given that it might be a very difficult time in terms of
can't have nice things
because 50%
not have nice things.
how they're going to narrate it, how they're going to talk about it, how can they keep a steady ship through it.
Let's talk about
that. Was probably the fucking death of it.
AI and the potential promises there. I know we're probably a long way away from a real profitable future for AI, but what are these CEOs telling you about how they're incorporating it? Are they scared of it? Do they see opportunity into it?
So what CEOs I speak to say is, it's now fairly obvious what the efficiency plays are. We all know the stories of how call centers can be reduced by 30% in terms of headcount, radiology reports, etc. What still isn't clear is how AI and generative AI is going to drive growth. And not even the specialists, the Sam Altmans and the Mark Benioffs, have been able to articulate that. So when I'm sitting with CEOs and their teams, probably 70% of their strategy discussions are on what are they going to do about AI, but probably only 4% of their budgets is being spent on it because it's not yet clear.
All right, here we go. Now, give me one quick second here. All right.
Number one, they're understanding that the winners will be the people that have the best data, not the best large language models. And secondly, they are not getting ahead.
Trigger full screen. Even with this squeeze higher today, even with the squeeze higher, there's some good news here. Number one, you've got you got a little bit of a squeeze going on right now. You guys are still in a 1-minute ticker, so don't get all crazy here.
Investment in
you guys get fucking crazy.
Investment won't just be in the large language models, but in the infrastructure and the storage to facilitate.
Want to see the new high up here and the bell if possible. Here's the prior high right here.
Because the infrastructure
coming into
investment's going to be huge.
Globally, where do you think CEOs
here,
feel the most
this is too much shit.
To deploy capital?
Well, obviously the major economies continue to be the big.
Still stuck in the middle with you.
Disruptions that you referenced a minute ago.
Got a low here, higher low here. You got the prior high here, series of lower lows. Still have a lower low there. So I want to see the new high.
At the moment, and now with
low
elections and uncertainty.
Fuck that one.
Those elections.
Higher low, major low,
time for CEOs.
Major low. I really want to see like the new high.
Quickly, they don't make the
before end of day.
That becomes.
I really want to see it.
They pivot. Right, Alex, but they do it now.
But you're describing a very hard job. I mean, the CEO position has always been a hard job.
And there it is right there. So
huge turnover in the C-suite. I mean, the CFO turnover is astronomical. We haven't seen anything like this, at least in this most recent.
Why do I want to see that? I want to see that for a trip to 5,400 up here.
10 years ago, the average tenure was.
We don't need to go there just now, but it'd be nice to see that, and then the pull back to 530, and then wham, we're at 540.
Largest number of CEO in the S&P 500 ever. So it was a stressful job.
I don't like the roll before then.
Multiplicity of issues.
I always like to see it. It's like a sign of strength.
That makes it an
so then any weakness into the FOMC tomorrow.
Enlightening conversation here, Simon. Always.
Any weakness into FOMC tomorrow.
Phenomenal, Simon Freakley, the CEO over.
Would be bought.
Partners.
There is another positive here, though. I got another positive for you.
Is that why we booked him?
Yes, that's exactly.
The gamma flip has moved higher to 53.10.
Quickly, but then you also don't have.
The gamma flip is now higher.
And I can't quite tell if that's a good or bad thing for a huge company to do in this time.
Yeah, well, I guess it depends on what your company
Yeah,
is.
but that's why I'm not the CEO. So
Boeing, maybe.
Maybe you do need that. Yeah,
if you're another company, maybe not. All right, we're going to talk a lot more here about some of the big movers on the day. A closer look at Comcast coming up, which actually got its only negative analyst rating earlier today. We're going to talk to the analyst behind that call and what exactly is ailing Comcast. That's coming up next on The Close. This is Bloomberg.
Okay, so let me turn this off. So tomorrow for FOMC, the idea is people want to see us trade 5,400, right? Right there. There isn't a lot of gamma developed to the upside up here. We've got Got a pretty hard wall at 5,400, which is, or 5,400, which is, let me see what I got here. It's right here. 375, 7, 5. So that would be like 54, 54.1 maybe 10. Get that? I think I got that right. So slightly higher. 1.5% move? Nope. It's only a 1% move. Daily trigger should be up here tomorrow. It's 526. As long as price doesn't reject tomorrow below 528, I mean reject with a new low. This will be up here. We are still in line to trade 5,400 to the upside. 5,400 on SPX, which is, I think, 51.30 or something like that. 541.30, slightly higher than that 54.16. I haven't done the math, but it's somewhere up here. $1.91, maybe 542. Right there. There's CPI coming out in the morning. You know that both trades are different. Two separate trades, or at least JPM is considering it two separate trades. If we get a cool CPI reading, could see us trade right up here in the morning. Would likely be sold off, though, until we get to the actual FOMC. Treat them as separate things. And then we'd trade that again, or we'd blast down depending on what the meeting is tomorrow. My expectations, though, for tomorrow, I know you don't want to see it. We're still in that range. Down here and up there. Still waiting for that relief. I don't know if I'll get it or not, so I may or may not get it. I don't know. I've not seen any downside moves, right? Too supportive. Gamma's supportive. Gamma's supportive. We had a great an A auction today. That's good to see. We could easily, on a good CPI report tomorrow, right here, and a failure. One. A failure back down into 2 p.m. So where's 2 p.m.? Where's 2 p.m. for tomorrow? Right here? Right there. So here's your alternate count for tomorrow. Oh. There's your alternate count. This would be the report right here. 2 o'clock. We have the interview at 2:30, and it's not giving me that choice to put it in there, but so you don't even need that. So if you get a good report tomorrow, good CPI report, upside expectations 539.65 or so, maybe slightly higher, 539.80. So you'd wake up tomorrow morning, 4 a.m., 6 a.m., 8 a.m., or some shit like that. Boom, we get a good report. You're up there. It should come back, though. It should come back waiting for the policy decision at 2 p.m. Now, if we get a bad report tomorrow, we are going to sell down here into 2 p.m. You can bet your bottom ass we're going to sell that down. If the report is not that bad, right? Let's say we get a bad report, a hot report. You guys have that in your brief, by the way. You have a cheat sheet on what to expect in CPI. JPM highlighted that they're still independent. If we're down If we're down a 1.5%, that puts us still in range. 1.5%, still in range down here. So if the report comes in slightly hot, we will bounce down here and hold no problem. Now, there is something else to discuss here. I've been harping on it all day long. You really need to pay attention tomorrow. I think the expectation is, I think you all agree with this. Expectation tomorrow is no rate hike, no rate cut. Data dependent. We're going to wait and see until the fall. We'll make a decision in the fall. And we'll wait and see how it all, just as it's been, right? And we've had some hawkish and dovish tones in the past, but generally speaking, we're going to be hands off and be data dependent. I truly think that is a poor decision by the Fed if they choose that tomorrow. And it's possible that the market will react negatively to that if it's not addressed either from Jerome or during the presser by reporters. If Jerome comes off like, hey, look, I'm fucking neutral here and we're going to wait. We're going to take the summer off like Nick Timros is saying, and he doesn't address it, it'll be negative briefly on the market. If the reporters don't ask questions about that, that's negative as well. I don't think many people are thinking about that right now, and I think that's real. Now, I don't think he gets away with doing that. I don't think he's going to get away with saying data dependent, I'm not hawkish, I'm not fucking dovish, and the reporters aren't going to press him on that subject. Because the data right now says two important things. The data right now says the work they've done has done what it was supposed to do on most of our data. It's there. It is at risk of eroding our economy if it continues. So if he's going to say tomorrow, I'll fucking see you in the fall, that data could deteriorate from now until then to a point where we risk real recession. And the jobs and labor and unemployment and employment could erode as well, and you could see a ramp in that time period between now and fall, where it does get out of control. This is where it comes in where the Fed is over tightening. You hear this before, right? The Fed is fucking out of control. What the fuck are they doing? So my expectation tomorrow is going to be that you're going to hear the Fed try to either broach the idea for you to eat this summer, that it's probably better for us to run the economy slightly hot. At least the speak. You have a small chance of a rate cut tomorrow as well, for a real one. You really do. If you go dig deep in the data, there's a small chance. Do I think he does that? No, he doesn't do that. Jerome Powell likes to warn you in advance of moves they're going to make. They're non-adversarial. Mostly, they've been non-adversarial. He got stinky when Timros and everybody else was calling him out and telling him that he was a lackey for the president. And he came out and got hawkish speak one day. Remember that? On one of his decisions. He was like, I'm not beholden to anybody, blah, blah, blah. This is none of the fucking things. So he's throwing Timros a curveball the last two rate decisions. Timros has been fucking way off base. And Timros today came out again with what sounded fucking insane to me, like pure insanity. So if the Fed thinks they're going to, if that's true, he's the real Fed mouthpiece, they're out of their fucking mind. Because the data will deteriorate from now into the fall and winter. And there will be fear by market participants that they have over tightened, and that by the time they look at it again, it'll be too late. Too little, too late to recover from. So I'm going to expect the Fed president to take on a dovish stance of some kind, and some kind of not, it doesn't necessarily have to do the 25 BPS, but open the discussion to, hey, we're there to let the economy run a little hot here. We're there. So that doesn't mean we're going to cut all rates in the fall. It just means we're there. It's time to step back a minute. Maybe ease off the rates. Let the economy run for a little bit, so that the reason for that is you want to strengthen the employment market a little bit. I don't give a fuck about these guys out there that own the hotels and shit that are overextended, but I really do care about the employment market. And one of the mandates of the Fed is a robust employment market. And it is at risk right now of deteriorating when it's just starting to recover. So you get that balance of inflation, you get the balance of manufacturing, services, spending money, wages, but then employment is important. It's very important. It's part of their mandate. So I want you to consider both of those sides to their operations that they perform. If they say fuck you and fuck it, the labor market's awesome, everything will be fine. I expect next week or the following day or in the next few weeks that there will be a growing concern that the Fed is out of fucking control and that the doom will be here earlier than March and January. It's probable it'll be here by fall, winter. They might want that too. Maybe they're trying to time that. There could be a bunch of shit for the Fed to go through. There's high risk in them even introducing the conversation of a rate cut. The market will position for that rate cut as we come into the fall to roll us down. There's a possibility that the market could run away with it. If he can't articulate to you that, hey, we're going to let it run hot, maybe we'll do 125 BPS rate cut in the fall, but don't expect anything more than that. And we're likely to raise rates again in the future, as long as he can get that across to you. But that's risky as a conversation. The easiest conversation is what Timrose is saying. You don't say shit. Data dependent. Let it ride as long as it rides. That is probably the safest stance for the Fed, but it does have material implications if they ride that down the road. I would expect huge deterioration between the time now until we get into the fall and winter, and I don't think they can do a fucking thing at that point to save it. They will chase with rate cuts into 2026. So you're setting up a series of rate cuts in 26 rather than just one, or trying to extend this market out, or that Goldilocks trade that everybody wants. So pay attention closely tomorrow to that Fed speak and the counter from the reporters and why it matters, not today, but it fucking matters as we head into the fall and winter and into the springtime. They should be wrapping up their shit right now. I'm serious. Or not wrapping it up for just now. The rate of the rise in the rate increases, right, did the job that they wanted. There should be some relief and then maybe more rate hikes in the future. So my prediction for tomorrow, right? And I've been wrong a lot this week. I haven't gotten anything I wanted this week. No downside at all allowed. Still, though, looking for that downside move to 526 at the best case, if not lower. And I want that, though, for ultimately a buy to go up. I think that ultimately we do go up. We trade this 540 and we trade this 550. So even my bear, I think I discussed this last night in the market brief. Even in my bearishness, it's for a better position. I don't like to chase. I don't want to chase. I don't want to be buying a dip down here, right, for a move right here. Sorry, I'm not doing it, especially not with the grind in here. I always prefer the pullback to take that trade, and I can't stand the no continuation. Where I don't mind the intraday trading stuff. We just took a trade right here. But I don't like taking the big trade like right fucking here and get ground out all week long. No big move up, no big move up, no big move up. So if you're going to put the big trade on, you want to take the trade, usually from a nice low, and then boom, that big move higher. So I don't like chasing. I don't mind chasing a breakout. If we break out like right here and then do that, I'll take that trade right there all day long. But this is a fucking zone of death, and anybody that says that it isn't is out of their fucking skulls. This is all bad shit in here. I don't like this trade. Never do. Never will. I either want to pick up the bloodbath over here to go up there, or I want to chase a breakout above. Do you understand that? So what would be my preference here? What's my preference as a bull? Always the bloodbath for the big move right there. That's the big money on a consolidation. Saying, yeah, Cap, you should just be long right in here. You're like here, and then wait 3 days, 5 days, get the fucking volatility in here, then we go up here. That's all nonsense. So I don't need to get stuck in this shit. I can day trade this all day long, in, out, in, out, in, out, in, out. Just another fucking finger trap on a larger time frame. So I want to see this come down here to get that trade. So yeah, am I a bear? Fuck yeah, I am. So I can take that big-ass trade to the upside. And that happens a lot. As a matter of fact, here's one right here. Here's a prime example. There's your upside move everybody's talking about. And sure than shit, boom down, and we get the real move to the upside. So where's the money? There's some money in day trading this. But the real money for the upside move is lower to that boom. And that's where the real money is. So what do I want up here? I want the same thing. I want the downside move that I can catch it. Or I just buy the breakout above. But all the talk about being in here buying fucking dips for a move higher tomorrow, for me, statistically, it's not there unless you make a breakout. And we don't have any fucking breakouts until we get some news. And we're getting it finally tomorrow. I can understand your stress in this or angst. But again, no fucking breakout. One big fat ass consolidation. We can get above this bullshit. Yeah, I'll take that trade. And that trade pisses me off too. Because this is still a bullshit trade. It's just like day trading. You know what I'm saying? Up, down, up, down, up, down, up, down. I really want that fucking move down and grab that shit to the upside. It's a beautiful banger trade. And if the Fed is not crazy, not overly hawkish, addresses the boogeyman in the room with some of the data that's been released, if they can at least say something to push this market higher, but in that haze, there's just enough volatility to either come down here to grab that eventuality at 2:30, 2 o'clock in the afternoon, or if I have to chase it, I'm not chasing unless we get a confirmed breakout. And I'll be pretty fucking disappointed if we do this move right here tomorrow. I'm going to be honest with you. I'm going to be pretty disappointed. Maybe there's two moves. You come down here, you get the dovish Fed. We have to take the move twice. But still disappointed. Hold on here. What do you guys think of that? Do you guys like the dip? Do you guys prefer this right here? Do you prefer the dip down and trade higher? Do you prefer what do you guys prefer? Here's SPX here. We went up here, down again. Do you prefer that move up, then that move down, and then the bigger move higher? Do you prefer the consolidation? The really good CPI, pull it back for the report at 2 p.m., then we go higher? Is that your preference? Depths of hell. I'm reading what you guys are saying right now. Here, I'll post this in the Discord. So you catch that new, God, fucking thing just won't stop moving. The 12th at 2:30. You know, something more like this right here. And there goes your right there. Let me draw that out for you on the trigger screen. CPI, cool print. I think it's 541 and change. And we hold the hourly trigger the entire way. You wake up in the morning. We've come down a little bit. We get a cool CPI report. Bam, up here. It's possible that you could still in the morning see this here. More of this bullshit. You know, like that's like 8:30 in the morning. Or 8 a.m. You see the blood down here, unless the CPI, boom, shoot it up. Come back into the 2 p.m. decision. And we rip up to 541. Depths of hell if the depths of hell of the FOMC is something stupid. Some kind of hawkishness. Five right there. Nope, 5 right there. 10 a.m. Yep, right in there. So this would be a right here would be a positive CPI. to be a positive CPI right here. Come down in the morning, bloodbath, no bullshit, like doom and gloom to 8 a.m. Good CPI, we squeeze up. Yeah, everybody's awesome. Trail off into 2 p.m. nice and slow. Hit 2 p.m. I don't know how far down we go, but this would be bullish. Ultimately finishes at 541 and change. I think that's the best outcome right here. I think this looks like the best outcome. I'm looking at it from this perspective right here. You guys want to know why I'm showing that? It's because the reason I'm telling you 541 and change is because unless we get a bunch of call developments on the upside, 5,400, which is about $1.36 or $1.63 difference between SPY and SPOOs. There's 164 million here. So this is an actual call wall. We can break above it, but this is a call wall right here. So you're going to expect a slam into that at some point, whether we break briefly above it or bounce off of it. There will be a pause there, I guarantee it. So 5,400, this is your down move, your up move, you're down into, and then we target this up here. And the peak, the trough, 5374. 53685, so just a buck. I got that right. It's $1. It's about $1 difference, $1 and change. Oh, wait a minute. Where am I at? Wrong fucking place. So I would say this is the best outcome that you can hope for tomorrow. This is the bull. This is the bull outcome. This can be this or this, whatever that bullshit is at 8 a.m. All that stretching shit. Cool CPI puts us up above. Any kind of nonsense and volatility. And then we rip face up to that 541 and change. Now, can we go higher than this tomorrow? Yes, but this is your first stop right in here. Might even be 540. I would posit that that's red and 540 on SPOOs is going to be your first pump the brakes. You'll get some hesitation here. Maybe that's your 230. We just rip fucking face, don't we? This stuff never lines up when I draw. Like, once we start changing stuff. Is that 2 p.m.? That's 12 p.m. 2 p.m.? I guess it's right down there. Get your pullback into the morning. You get your kick-ass CPI. Come back down. 2 p.m. Boom. We slam up. Come back down and bam, slam up into the break the 5,400 on SPX. I got to draw this better for you, but that's basically it right there. That's your bullish on bullish outcome. Personally, I want to see that fucking blood. Yeah, that's 2 p.m. right there. I want to see some fucking blood down here. I want to see some doom and gloom, and I want to buy the fuck out of that going into the presser. Anything close to down here, I want to buy the fuck out of it. Buy that shit. That's your bull case for tomorrow. That's all I got for you on this. That's your bull case for tomorrow. I don't know that I have anything else for you on that. That would be the bull expectation. I will draw this out for you for tonight so it looks a little bit better. Expectation in the morning. We did not get the new high. Expectation in the morning is that we bleed off down to 534.65 into the CPI report at 8:30 a.m. If the CPI report comes in cool, you should see a high of 537.56, a pullback for the Fed meeting or the Fed press release, and then a move up to 540, just below 539 or so. Pull it back one more time. We go into the presser, and we rip up to 541, 541.50, somewhere in there. Slam into the 5,400 target on Gamma for SPX. If Gamma improves tomorrow to the upside, if everybody gets all bulled up, they're like, woo, CPI is awesome, and the Fed comes out, and they're sucking off bulls, and we get that development to 5,500, 5,600, it's possible we could extend it. I don't think so. I think this is it up here, somewhere in here. We have, I think, a 1.5 expected move tomorrow as well. So even if we're going to trade that 5,500, you're likely going to see a pullback again, not that low, up here. Right? We'll hold 541 and then begin to attack 5,500, 5,600. And that would take us into the end of July. You'd have a dip at some point beginning of July for another run to like 55, 5,600, something like that. Let me read what you guys are saying. It's 3:51. Let's go back to a 1 minute. Do they squeeze it up and just get the high tick? Give me the high tick. Just give me like the one fucking, just do the creepy crawly up the wally right now. And that's still valid. I would like to see that tick and then that float down in the overnight. That's my preference. That nice little tick right there. That shows bullishness into the CPI report. Let's watch that closely right now. I went over GME this morning. I went over GME this morning. I went over GME already this morning. I already told you guys. You want to see the new high up here. Said you want to see the trade go to 31.53, pull back, and then confirm the leg higher. That leg higher would, the first leg higher would actually go to 37 bucks. That's GME. I drew it out at the start of this morning. NVDA you asked about. Okay, NVDA. Your money is leaving, okay? NVDA. You asked about NVDA. Let's go to 30-minute chart NVDA. Your money is going to Apple. How does that feel? That sucks, doesn't it? NVDA. I don't think NVDA rides with the rest of everybody. I think you might catch a little bit of a high in here. You might go up there. I'll give you that. That's all you get. That money has left the ship for now. That money is partying with Apple. I told you guys that story before, right? Yeah, you'll feel that one right there. Told you guys already. When you're the last guy left in a stock and you think, yeah, man, it's going to keep partying, I doubt it. See if we can catch that new high right here. Yeah, if you're an NVDA bull, look for 106, 107, somewhere in there, 110, to start to make new highs again. The party's over in NVDA. It's not over. It's going to go up. It's just the massive everybody on the trade for NVDA is probably not there right now. SPY trying to climb right now and catch that new high at 536.94, climbing the wall of worry. Look for this trade if we get the high tick for a little bit of downside in the overnight. You want that high tick right now. You don't need anything more than that, just the high tick. You literally need this thing to just go and kiss it. Just need it to kiss it. Doesn't have to go blasting through it, none of that stuff. And here's our one right here. It's actually lower. I think it's like right here. I think that's where the high tick is. Right. Always like seeing that. Little algos playing with each other. Finite math right here. What else do I got for you? Yeah, I like the new high. Don't worry about this, right? I just want that tick. Just want that one fucking tick. I just want that. Come on, give it to me. 3 minutes left. We can still get it done. Please get it done. 3 more bars. I'll even take it after the bell. I'll even accept it. I'll accept it from you, robot, at 4:01. Why is my fucking camera not on? Hold on here. Oops. Yep, there we go. Hold on. No, chat box. Sorry about that. Having technical, not paying attention issues right now. What are you guys doing? You guys doing the fuck counter for Jim James? Is that what you're doing? He said fuck 30 times today. Fuck, fuckity, fuck, fuck, fuck. I don't have sponsors. I choose not to have sponsors. I can say whatever I want. I know the moment I take sponsors, I'm going to clean it up around here. Start wearing polo shirts. Cut my hair and part it on the side. No more swearing from Jim James. I'll be an employee at that point. He's really cleaned his act up. He's a good representative of the company now. I know. The fucking community is gone. He's wearing pink polos. He's wearing lime green polos. He cut his hair off and he's sober. He stopped swearing. What the fuck did he do? I should show up like that tomorrow, shouldn't I? I know I got a fucking polo somewhere kicking around in a closet, all starched out and shit. I think I even have Brooks Brothers shirts still. I don't know if I still have them, but I think I might still have them. Oh, yeah, baby. Squeeze it up there. Squeeze it up there. Give me the high tick, baby. Give me the high tick. That's what I want to see right there. Right there. Look at the high tick. Bullish. Telling you the way is higher right now. I'm going to read one more thing to you really quick here. I got something down here on my screen. I'm going to read one more thing to you. Ready? I meant to say this to you earlier and didn't have the time. Bank of America sees broad-based equity inflows. First net buying in 6 weeks. Last week, during which the S&P 500 was 1.3% of BOFA, these nuts' security clients, were net buyers of U.S. secure equities. For the first time in 6 weeks, $1.9 billion with inflows in both single stocks and ETFs, led by the former. The largest single stock inflows since December 2023 and across all size segments. Private and hedge fund clients led net buying. In addition to corpos below with inflows for a second consecutive week and inflows for the first time in 4 weeks, respectively. Institutional clients were sellers for the second week in a row. Near record buybacks. BOFA Corp client buybacks give an early read on S&P 500 buyback trends and suggest a continued pickup. Corporate clients buybacks last week were the second largest in our weekly history since 2010 and have been tracking above typical seasonal levels for 13 weeks. Year to date, corporate client buybacks as a percentage of the S&P market cap, 0.44%, are above 2023 year-to-date highs of 0.34% at this time. While this report does not include sector-level granularity on executed buybacks, note that 70% of the announced S&P 500 buybacks year-to-date have been in tech communication services. Whew. I posted this to you last night in the market brief. I gave you a little thingamabobby. And that's the more detailed information in that. Let me see if I can show it to you right now. If you want to go back and read it, I will repost it with more information tonight. There's my screen right there. So these are inflows. I posted this for you last night, so I will repost it with more detailed data for you in this evening's brief. All right, that's all I got for you. You guys got anything else for me? Yep, front row Alpine. I'll see you tomorrow. Did GME this morning. GME fucking mooning. Everybody's stoked now, right? Jesus Christ. GME is fucking mooning. Hit the target already. Almost. Not quite, but almost. The high tick was $31. I didn't get the 34 cents. I'd really like to see the 34 cents, I'll be honest with you. And then I'd like to see the trade back to 27.48, and then we'll start talking about trading $38. You got it. You got it, St. Walnut. All right. I'll see all of you guys tomorrow at 9:30 in the morning. Can't wait to see you. Big day tomorrow. Tomorrow, do you guys want anybody to speak in the chat tomorrow, or should I limit it? Because shit's gonna get crazy. These rate meetings, dude. We bring in like fucking 10 or 20,000 people now. I don't know. It's gonna be crazy tomorrow. I might get shit-faced tonight and be late. These rate decisions are like seriously. We get like fucking huge viewership on these rate decisions. The last one, I think we had 8,000 or 10,000. It was insane. Okay, so don't get shit-faced tonight. I won't. I'll stay sober. True believers only. Look at my goddamn cat knocked my light down over here. Fucking cats, man. All right, I'll see all of you.